All right, ladies and gentlemen, we're going to be getting started here now with Chief Market Strategist from Miller Tabak, Matt Malley. He's going to be here with us today. So shout out to all you guys for being here. We're going to go ahead and get things going. So thanks for being here, and everybody that was, in the Zoom here. Let's go ahead and take a quick look. Bo Slim, Gary, what's going on? Ricky, Sarah, Victor. All right, we got a good crowd there. A couple of members there as well from the chat room. So for those that were asking, where was Matt Malley? We were pretty much waiting for him. He's live trading in the chat room Monday to Friday, 9 to 5 with the members. So basically, he just got off, so he's going to be here with us for about an hour or two. We're going to be talking about markets, trade ideas, education, options, volatility, and more importantly, how to make money out of all the stuff that's happening out there. So without further ado, let's go ahead and bring on Matt Malley, Chief Market Strategist and lead trader at the Stock Picks Inner Circle chat room. I think we have Matt here somewhere. I think he's good.
There you go. Sorry about that. I hit the wrong button there, Rodrigo. Sorry about that.
What's going on, man? How was the chat room today?
That was good. I was kind of, I must admit, I was in and out of it a little bit today because I went to took my sons to the U.S. Open practice round. But I had everything right here. Was monitoring things very, very closely, and I didn't go until about midday. But that's why I'm wearing my golf shirt here. But it's up here in the Boston area this weekend, so it was great to take go with my boys too. My boys are a little bit older, so they're not boys anymore. But I had a great time this Father's Day week to be able to spend a little time with them. But stayed very close, and I was home to make sure I was in for the power hour between 3 and 4 o'clock, when we do a lot of things. But we didn't do much today, and because we're setting up for the big thing, with the Fed meeting tomorrow, so it was a perfect day for me to sneak away for a little while because I didn't want. That's one of the things that is so important with active trading is that sometimes the best thing to do is just sit on your hands. We did that at the beginning of early last week. We didn't do a whole lot of trading. And then at the end of the week, we jumped in, did a bunch of trades, made the end of the week, the second half of the week, and made a real lot of money. Added some trades at the end of the day, late on Friday, which made us some real money, or a lot of money on Monday, yesterday, and again today. So right now we're kind of playing that same game today and then probably tomorrow morning. But as we get into midday and get closer to that big Fed meeting tomorrow, we're going to be, I think we're going to be doing some good trades. We're going to stay very, very nimble. And this whole thing, this chat room that we've been working on, it's been not a full year yet, but this year in particular has been really, really strong, really, really good. We've made a lot of money and we've been able to play both sides of the market. That's the most important thing, is that, for a long time, people just make money on the long side. We now have the tools to be able to take advantage of moves to the downside as well. And not only that, we have the tools to take advantage of upside movement much better than we used to. So it's really worked out well. And I think the next couple of weeks are going to continue to be wild ones, as they have been all year.
Right, and I think the most important part really here, Matt, is that it's pretty clear. Like, I mean, you just, like for people to just follow you, right? You give them entries, exits, contract price. There's a timestamp. Like, you can't miss it, right? It's always there. So that's really what I like. It's very easy to follow for people that are new, that are getting into options, that they don't want to do all the complicated stuff, Matt. They just want to trade around the volatility.
Yeah, and that's what I focus on. I mean, I'm a trader. I'm again a market strategist and have been for over a decade now. But I spent the first 25 years of my career in trading, and that's most strategists are former analysts or former economists, and they figure out what's going on in a theoretical world. I focus on what's going to happen in the real world, because you go on a trading desk and nobody cares about where the stock's going to be in 2 years from now. And everybody always comes on, these financial networks and say, I'm looking at the 5 to 10 year range, and that's great. And we all have investments. We all should have a bucket of investments, and that have that focus. But if you also have a bucket where you can really maximize your returns, especially in volatile years like this one, you have that bucket where active trading taking place. The fundamentals, in fact, some of the best moves are the ones that go completely against the long-term fundamentals, because everybody's assuming that the fundamentals are going to continue to work in a straight line. And I know as a trader, that doesn't happen. We get big moves, disparate moves from away from the longer-term trends, and that's where we make a lot of money. And I spent 25 years, 15 years at Solomon Brothers, which was the biggest trading desk in the last three decades of the 20th century. I mean, I wasn't there for all 3 decades, but I was there for 15 years, and then was at Merrill Lynch for 10 years. Again, Solomon Brothers is the most important trading desk on Wall Street until they got bought out in the mid 90s, and I moved to Merrill Lynch, the biggest trading desk, and I covered the biggest accounts in the world, the biggest institutional accounts, whether it be the biggest mutual funds like Fidelity, the very biggest hedge funds like BlackRock, biggest banks, insurance companies, etc., other money managers. And so you really learn about what's really going to happen, not what theoretically should happen. And that's been able to help me. And we look beyond the fundamentals. And fundamentals are very, very important, but we look beyond the fundamentals, look at technical analysis, sentiment, positioning, et cetera. And that's really helped us to make some great bets at key turning points in the market. And we've been able to do it on a consistent basis. That's what I'm really most proud of. I mean, sure, we've got some huge home runs, some grand slams where it's just been these wild trades. But we've also had, they might have been grand slams, but they were home runs where we're making well over 100% in just a few trading days. And we've been doing this pretty much every week for quite a few weeks now. It's not, and I don't want to say, hey, we're going to do it every single week all year long, but they do come up, and when the volatility is the way it is right now, they're there, and we've been able to take advantage of them.
Right. So, I mean, you've been in Wall Street for about 40 years as a trader, as a strategist at this point, so that's a lot of experience, definitely. So that's always good for people that, want to start with the right mentor, right? But so there's a lot of volatility going on right now, Matt. If you try to wing it right now compared to like 2020, retail traders were doing kind of all right. 2020, everything goes up, but now it's very different. There's a lot of things happening out there. So like, as a new trader, right? This is something that I think has is a good way to show them, hey, don't be scared of the markets. You can profit from this volatility and things that are happening. So let's show them like your strategy, the Matt Malley strategy. If you can share your screen, show them basically like the trades that we've made this week, last week, because
sure.
It's just honestly, man, like it's really the timing, like and also the experience, right? Because a lot of people ask me like, hey, Matt's pretty good at this and all that stuff. But I mean, you do this for 40 years at you know, at high level, you know, firms, and you know, so
Exactly. So you know, it's and that's the thing. We're trying to do what whoops, let me make it perfect. We'll talk about trades we did. We closed on Monday. And can you see my screen right now? I'll maybe blow it up so you can see it a little bit better. Is that you see it
no,
okay?
not yet, not
Whoops,
yet.
okay. I tried to screen share, so that's probably my fault. Hold on, let me go back to the screen share.
I
Bang.
think I need to stop sharing.
Okay,
Maybe.
let me okay, bang. Okay, bang. Okay, there we go. Yeah, okay. There we go. Okay, can you see it now?
Yeah, you're all good now.
Okay, perfect. Let me blow it up so you can see it better too. This is not just a stronger. There we go. Let me take up the whole. Whoops. Okay, there we go. Okay, so we'll just talk about these. These are some couple of trades that we did on Friday. I was people were, I've been very, very bullish on the stock market, and I'm sorry, on the oil market, not bullish at all on the stock market, believe me. I've been bearish for quite a while, but very bullish on the oil markets, and actually been bullish since 2000 and October 2020. I was very, very early, long before pretty much anybody else on Wall Street was pounding the table back then. But there's been a couple of times we've been able to take opportunities to go out and buy walk away, step back, and just say, I'll just say, hey, in your long-term portfolios, you really want to own a lot of oil stocks. I've been saying that again for almost 2 years now, but they've been, like I said, a couple of times they say, okay, maybe we'll cut back our exposure a little bit. Another time saying, no, we're not going to cut back our exposure. We're just not going to chase them. We're going to let the stocks come to us. But we've had other times where we said, hey, this thing's getting way overbought. Let's buy some put options. And the XLE is right here what we did last Friday, or actually it was actually earlier in the week. We bought these things. The XLE, again, whenever, and as Rodrigo said, when I come in, we give some specific trades. We don't just say, hey, the oil stocks look vulnerable here. You got to think about buying a few puts on some oil stocks. We say specifically, what are we going to do? And we decided to go right for the ETF, the XLE, Energy Stock ETF. So I said, the specific ETF, the expiration date, June 17th, which is actually this coming Friday. And then the $90 put, I'm sorry, $90, a strike price. Then, of course, whether it's going to be a put or a call. In this case, it was a put. So we came in here, and this was, actually, it wasn't on Friday, even though, again, this was the June 17th put. So we were going out a week and a half. But we came in on Tuesday and bought these puts, okay? And take that back. It was on late Wednesday, Wednesday the 8th, came in and we bought these puts, the XLE puts. Okay, we held them, and when the market came in on Monday, sure enough, the oil stocks got clobbered. The XLE, these put options rallied 470% from their. They'd already, put it this way, they were already rallying nicely. They rallied again on Friday. People were saying, take profits. I said, I'm going to hold on to mine. Okay, and so we held on, and sure enough, we made 470%. And this is where I sold part of it. Okay, right in here, just after the opening. We didn't sell all of them. In fact, I only sold about 25% of them right here. Then later in the day, I came in and said, let's sell the rest of these things at 500 with a nice gain of almost 600%. So 500%, 6 times our money in this thing. So we combined the two. It was much more. We sold 2/3 of it. I'm sorry, 3/4 of it here, 1/4 of it here. So it was really, closer to, 540, whatever. Oh, well above 500% a gain on that stock. That was just on Monday, okay? Now, the other profit that we took on Monday was the SQQQ calls. Now, remember, the SQQQ, that's the inverse ETF on the QQQ. Now, what's the QQQ? If you're not sure what that is, no problem. What that is the Nasdaq 100, the Nasdaq 100 ETF. And the Nasdaq 100 is the top 100 names in the Nasdaq stock and the Nasdaq market. And of course, the Nasdaq market is highly concentrated in the tech names. So the Nasdaq 100 has got all those big cap tech names. And that's why we've been trading that one a lot, because it's been the most volatile in the marketplace. And sure enough, we came in on, again, Friday the 10th. This is Friday. You see June 10th right here. Late in the day, they came in, was holding off. And I said, we're going to go, late in the day, I said, okay, let's go ahead and buy some call options. Now, it sounds funny. It's like, wait a minute, I thought you made a negative bet. Yes, I did make a negative bet. But since the SQQQ is an inverse ETF, so in other words, it goes up when the market goes down, we want to buy call options. So the call options are actually a bearish bet. And so again, I came in and said, SQQQ, so you knew which ETF we were buying, the exact exact expiration day, June 17th, the exact strike price, and whether we're buying, the calls rather than the puts. And sure enough, we walked in on Monday and the market was getting hit hard. We sold a big chunk of, I held out a little bit. We sold, actually it was a small piece, 10% here, up 200%. So up 200% is 3 times your money. Obviously 100% is double your money, 200% is 3 times your money. And then we sold more, really very, very late in the day, up 275%. And I still own some, okay? So I sold those. I sold a little bit more today at about that same 270% gain, and I still own some that, again, these expire on Friday. But again, this is something. So this week there were two trades that we've already taken the advantage of, and then so we put these trades on late last week and profited from, and then whoops, oh, the wrong way, whoops. And then on the QQQ, what I also did on Friday. It's very late in the day, the same time we bought the SQQQ trade with the QQQ, all these Qs, we bought the June 13th. So I just went out the one trading day. Okay, we bought them late on Friday. The expiration date was Monday. And the reason why I did that is because if you got a very short time frame, your time value, the premium you have to pay for that option isn't anywhere near as big. So we went with that. It wasn't as big a trade. It wasn't as big a position, I should say. But we went in and we bought, again, same thing, very specific trade, QQQ, June 13th for the strike price, for the expiration date, $285 for the strike price. It was a put option because we were looking, again, the QQQ is the regular ETF. So the put option is a bet that it would go down. And sure enough, it was up. And in the first hour of trading over 500%, and I sold them. Boom. We actually sold them. I sold part of them, and then literally a few minutes later, I said, forget it, let's sell them. And the reason why I did that is because it's, geez, you were bearish on the market. You thought it could go lower, and you know something, I did miss it. Okay, it could have gone higher, but I didn't mind. I didn't get the exact low, but got very close to it. And when you make 500%, and I still had a much bigger position in the SQQQs. You can't get greedy, especially because these things are going to expire that day. Anything could have happened that day. It's like you have 500%. That 500% gain could turn into a 100% gain or a 20% gain or even a loss in a blink of an eye because it's literally they expire that day. So it's risk management. People are going to be mad that they didn't get the exact top and they didn't make 800%. Well, you shouldn't be doing this because you'll drive yourself crazy because you'll never get the exact bottom, you'll never get the exact top. And the one once in a blue moon, when you do get it, it's luck. And I don't care how good a trader you are, and all traders will say they're not trying to get the exact top or the exact bottom. We're trying to use risk management in a positive way so that when we get these big moves like 500%, they work out really well. Now, this is the trades we just did this week. So that's 3 trades, all in the multi-100% ranges. And then last week, same thing. This was, whoops. Did I do the right way? Yes, I. Oh, okay, good. I went the wrong way. I apologize. Okay, here we go. Okay, so this was now Friday was June 10th. Now back on the 9th. Okay, late in the day. Remember how we made those that call. I'm sorry, that play on the SQQQs. Well, the reason why what we really did in that was we went back into the different one. We bought because we had made a big profit earlier in the day on Friday. So this is what we did late on Thursday, June 9th, we came in and we bought the SQQQ June 10th, $52 call options, expecting the market to go down. And sure enough, bang, 400% by, before 11 o'clock. That's 5 times your money. It says 400%. So, that's, how often it was a stock go 400% in a day? These are the type of volatility. We didn't get the exact top. I wish we'd bought more here. I thought about buying it here. We didn't. We bought it late. But again, 400%. If you bought it here, you might have, I didn't get the exact low. I didn't get the exact high. I'm not worried about that. 400%. I pat myself on the back and we move to the next one. So, boom. And here we are. Okay. Good. So that was last week. So we did some nice prices this week. And then last week, remember I said that earlier in the week, we really didn't chase much. We kind of sat on our hands and then waited for the opportunity to take place. It presented itself on Thursday. By Friday, we made a 400% profit. And then at the end of the day, we made a bunch of big new trades that worked out very, very well by Monday. So these are the types of things that we do. We're getting them. And then the week before, we had it on the opposite side. I became very bullish on the market. And we bought a couple different things. In one case, we came in for the advanced micro devices call options. We bought those late in the day. It's funny because a lot of people held on to them a lot longer than I did. But here we were on June 1st. Bought them early in the day. They were looking bad. I actually sold out of mine here, but most of the people stuck with them. And we talked about buying them here again. But I have to tell you what I did. I mean, and then ran up here, and when I sold 146% again, 146. Well, that's not 500%. You more than double your money. You made time and a half. Now, not all of our stocks trade. Not all of our stocks win. The whole idea is making sure that we nibble on little things, and then when the trade looks really good, then we make a real bet, and that's what we do on things like advanced micro devices. And earlier in the month, this is one I did. It was people in the chat room, not me, that did this. They went in. Now this is the split price, but people came in and they talked about it. I did not join in on the trade, but I saw it. I chose not to get in. Others did, and look at the returns they made. Okay, Amazon, June 3rd, $2,500 calls, over 500% if they bought them here. Again, this is when they were talking about buying them. I did not buy them. I can't take credit for it. And then people made as much as 1,500% the next day. But again, we're just going back to bang. Oops. Okay, now we're looking late May. The TQQQ. Remember, I saw the SQQQ. That's the inverse 3-time levered ETF. Now we're looking at the 3-time positive ETF on the QQQ. And again, we came in here. It was a bullish trade. We don't just we make money. The whole idea is to be nimble and be able to make it on both sides of the market. And that's one of the things that is so important right now, is that we have the tools. We have these ETFs that are very, very liquid. But not only that, their options expire 3 times a week. Monday, Wednesday, Friday. That's on the SPY, which is the S&P 500 ETF, the QQQ, which is the Nasdaq ETF, and the IWM, which is the Russell 2000 ETF. All those 3 of those have options expire Monday, Wednesday, and Friday. That is so great, because in the old days, if you wanted to buy something and they only expired once a quarter. So, I mean, yeah, sure. If you were lucky enough to get a good idea the week they expired, great. You didn't have to pay that much for them. But if you had ideas that, geez, I really think this, the Nasdaq is really going to see a nice pop here, you would have to go out 3 months. You know how expensive it is to go out 3 months on your options? Now, because you have to go 1 day. You can go out just a couple of days in these options, in these index ETF options. So it's unbelievably, if you have a really good play to make, they're unbelievably profitable and very easy. Like I said, very liquid. You get in and out of them very easily. Now, the leveraged ETFs that I just talked about, the SQQQ, the TQQQ, those things only expire every week. So just be aware of that. But the thing is, we also have it for, I saw that we mentioned Amazon and advanced micro devices. Those are, these large cap names. They all have options that expire every week, not every 3 months. Every week. So again, you don't have to pay those big time premiums. So we can make these nice moves when we catch them in a volatile market. And that's what we've been able to do. But again, on a consistent basis. Remember, I said this was May. So we made some this week. We made some last week on those SQQQs. We made, again, the TQQQ, the exact May 27th expiration date, the strike price of $30, call option. We bought them here mid-afternoon and sold them before the end of the day. This is one of these things where I said, we got towards the end of the day and I said, we've made 100% in 2 hours. Let's get out. Let's just take the profit and move on. This one, we got almost exactly at the top. It really worked out well because it sold off. Made some real good money there. And then we talked about, I'm sorry, I'm going the wrong way again. And then this basically at the same time, again, the May 23rd, that was earlier that week. It said one was May 27th. And again, we came in, the date that we did the trade was May 20th, but we bought the May 23rd calls, okay? And again, QQQ, May 23, $287 a strike price, a call option, made 174%. Again, we got right to the close, and I said, I don't know. I have no idea what's going to happen to market tomorrow. I have a good feeling of what I think is going to happen tomorrow, but I don't know for sure. We've just almost tripled our money, up 174%. I'm not going to take the chance. Let's take our profit. And again, that worked out extremely well. But I'm just trying to show you that these things are things that we are making on a.
I don't. For those that don't know, Matt Malley has the record here of the biggest percentage gain trade in Benzinga history, and before that, he had the record as well. But this, I mean, just tell them all about it, because I mean, for those that don't know, you're a global strategist, equity strategist. You're looking at global markets, so you'll find volatility in China, wherever it is, in any commodity, you'll find the volatility if it's there. But tell them all about it. That was crazy.
Yeah, that's what that's the thing. That's what we're trying to do. We're just find it wherever we can find it. We don't care. We don't care where it takes place. Hold on a second. I want to make sure I have my right thing so I can find it for you. Yeah, here we go. Okay. 60. Okay, here we go. Bang. So this is what happened. This is going back in March. Let me blow it up again so you can see it better. Back in March, we had been very, very worried about China, the China stock market, and we came in and I just said, listen, there's a good reason. I'd hate it. Look at this thing. From all of 2021, while the U.S. stock market went up, China went down. They were hammering, cracking down on all their technology. Anything having to do with technology was different parts of it. Every single month they came out and knocked down a different sector, and the market just got clobbered. This was the FXI. So this is the ETF on China's stock market, their large cap stocks. That's the XFI China large cap ETF. But look, it had become incredibly oversold. So even though I didn't like it and don't really like it still, I said, oh my God, we got the most oversold ready. Forget about this thing where it says last week's chart, because it was last week's chart in March. But we had, again, it was the most oversold reading record. This was what we call the RSI chart, the relative strength index. And the relative strength index, when you get here, when you see with this green line, it gets down to the 30 reading. That means go ahead, buy. It's getting oversold. Green, go, buy. And then when it gets up to the red line, that's the 70 level. That's a red to say stop, don't buy it up here, and even think about shorting it. But every single time, see when it got oversold here, rally. Got oversold here, it bounced for a week. Got oversold here, bounced for a couple of weeks. Got oversold here, bounced for a couple of weeks. Look how ridiculously oversold this became. I'm like, oh my God. And I also knew just from my experience that these guys in China, when their market gets in really bad shape, the government comes in and supports it, and they just push it back up. So I knew that we were ripe for a big turnaround. So I came in and we said, okay, late one day, we're going to go ahead and we're going to buy some FXI call options. And sure enough, looks what happened the next day. The whole market up 27%. So that's the Chinese market up 27%. That's all you say. It's like, could you imagine the Dow Jones or the S&P rallying 27% in one day? Well, that's what happened in China. And sure enough, we took advantage of it. Boom, we bought the FXI, March 18th, $30 call options. Again, but they said March 18th was their expiration date. We bought them on the 15th. The next day, they opened up over 1,000% higher. I did not sell them. They said, well, why wouldn't you take, wait a minute, you said earlier that if something opens with a huge gain, you got to take at least some profits. I didn't in this situation because it was so grossly oversold. But I also knew the buyers would stick with it because I knew one of the big buyers was going to be the Chinese government, and they were going to do whatever it took to make sure the market went higher. So we held on for a while, but then it got to be up 3,000%. And I said, okay, we can't be greedy here. Let's sell half. So we sold a portion here. It's 2,900%. So basically up 3,000%, almost 3,000%. But I kept holding on to it because I really felt that the Chinese government would continue to buy it. And sure enough, it did. When it got up 7,800%, almost 8,000%, I sold the rest of mine. Other people in the chat room held on to some of their positions and made as much as 14,000% the next day because the market kept rallying. These are the type of, again, these are not the trades that we necessarily happen every day, but they are ones that we can get when you get these thousands of percentiles. The other one here is that, here we go back here, bang, here we go. Okay, I want to go to 79. The other one we did was this is last year. Okay, so again, when you get something in multiple thousands of percent, it doesn't happen very often, but Rodrigo was alluding to, I held the old record. The old record was this one, was Viacom. And see, again, we're using the RSI chart. This is actually the weekly RSI chart. Remember how all those meme stocks had become grossly overbought? Well, Viacom was one of them. And I just, again, look at the RSI chart. See when it got overbought here, sold off, got overbought here, sold off, overbought here, sold off. That's ridiculously overbought. This is getting up just above the 70. This has gotten in the mid 90s. I'd never seen a stock this overbought. And so literally right at the top, I said, okay, we're going to go out and buy some Viacom put options. And the stock dropped 61% the next day. And we sold half when it was up 2,500%. Sold the other half when it was up 5,000%. Other people said that they held on as much as 10,000%. I don't know that for sure, but that's what people said. And theoretically, it could have, if you looked at the prices of those. I can only tell you what we did. But either way, these are the types of things that we're doing. As I just showed, also, we've been able to make ones in the hundreds of percent gains pretty much every week for a couple of weeks now. Now, there definitely gonna be some weeks we don't do that. We've had some weeks where we we've had some, we always have some winners, but we also always have some losers. And the whole idea is to make it sure that the big numbers, the winners are the ones where we make a lot of money, and the ones we lose money on, we don't lose much. So that nobody can bat 1,000. I've said this a million times, and anybody who claims they can bat 1,000, run away from them as fast as you can, because they're lying. But for those who can make, you take the little ones, you get out of them with this, minimize your losses there. But again, with the strategy that I follow, a lot of times we start with a small amount, and it's not working, and we take our loss. Okay, no big deal. And sometimes it's like, they expired, worthless. Who cares? It was a small amount. We nibbled just a tiny amount, but then it's working. Okay, let's add to it. And because we're much more confident it's going to move. So that way we can kind of avoid big losses in big gains. And that's one thing I try to highlight a lot. And some people, one person said they lost 30% of their portfolio in a day or 2 days, 2-day period. I was like, I've never put that kind of risk on my portfolio. To put that kind of risk where I could lose that much money in 2 days, that's not what we do. It's a risky environment. There's no question. Options are risky. You can lose a lot of money in options, but you can make a lot of money in options. We try to do it in a way where where you avoid putting huge percentages of your portfolio at risk at any one given time. But you minimize the losses. And again, you can't bat 1,000, but if you're batting 700 or 600, certainly 600. And again, those are the number of hits you get. But when the downside are negative doubles or negative singles, and the upside are doubles, triples, and home runs, the whole thing works out very, very well. And like I said, we've been able to do it quite consistently for all of this year, and on both sides. It's like, oh well, Matt's just very bearish, and he's been lucky because the market's gone down this year. It's like as I've shown in a lot of these trades, a portion of these moves these profits we've made have been in situations where the market rallied, not when it sold off. But one of the biggest things we're able to do is that I've been bearish all year since early in the year, late last year. And that's kind of been the thesis that I've had the big picture right, and we've been able to make short-term trades in both directions to really profit.
No, that's pretty. And look, since I've been here for about 1.5 years, I mean, I've been following your picks. It's been dead on and everything. I've been trading them. But so really quick, Matt, I'm getting a lot of questions on my email about the chat room. So it'll just take me a minute or two here to get over this, and then we can get on with the session, because I know that there's a lot to unwrap here, right? So let me just get through. All right, really quick here. So, and thanks for these questions again, guys, for this stuff. All right, so does Matt Malley go over member trade ideas? Yes, that happens a lot. It's a two-way street, right? There's communication back and forth in the chat room. Are the sessions on Tuesdays recorded? Yes, Matt Malley has a session at 11:30 a.m. Eastern every Tuesday for about an hour or so or less. But usually around there. He can go longer always if he wants. All right, good question there, Phil. Next question: does everybody that joined get a free laptop? Yes, until midnight. What is the chat room schedule? Monday to Friday, 9 to 5, and you also have that meeting on Tuesdays just for the chat members again. And again, this other one, is there a money back guarantee? Yes, 7-day money back guarantee. and the price at renewal is the same as today, 70% off. And that's for the year. So that covers everything, at least from the questions that you guys sent. If you have other questions, send them over again. You have my email there, but I think we're good to go with this, Matt.
Great. Yeah. The thing is that the thing I just to highlight is that, again, you get the money back guaranteed, but so you'll be able to check it out and see if you like it. Number one, but number two, the other thing is that it is a group effort. A lot of people in the room are helping each other, coming up with ideas. What do you think of this? What do you think of that? And like I've shown you, some of the ideas, some of the biggest gainers last week. I didn't even show you one. I showed you one on Amazon. There was another one on the high yield, the HYG ETF, which is a high yield ETF, where somebody made over 2,000%. I did not get involved in that trade. It was somebody else's trade, but she shared it with everybody, and it was a huge one for her and for the other people who decided to take the trade. But and again, and we're helping each other all the time. That's the whole idea. Not just to give you trades, but to teach you what, or at least explain. At least in my case, I've been doing it for 40 years. Hopefully I can be educational and helpful. What you're looking at here, by the way, if you're still looking and see my screen, this is a Bitcoin, and it's getting hit again today. Remember, Bitcoin closes at 5:30 for like a minute and then reopens again so they can get because you need a final price for funds to mark funds and things like that. But it's back down about 500 points now. Again, if it gets below 21,000, we'll talk about that in a minute. But anyway, if people are wondering what's going on here, this is Bitcoin, which does not trade. Which does not, basically doesn't stop trading. But anyway, so this whole we try to help each other. The call today, because I knew I was going to the U.S. Open with my sons. We did the call at 8:30 this morning, but usually 11:30, and it was started off. And go, hey, let's do 20 minutes, a half hour, and just like every week, it seemed to be going for 45 minutes or longer, and so that's where it's worked out. We try to do educational things. Today we talked about Fibonacci relationships and why the market retraces on certain mathematical levels. When we see big moves, and when we see a market's trending down and then it moves up, you use these mathematical levels to get an idea and where it will top out and roll back over. And same thing when it's rallying. Sometimes you pull back, and again, there's a lot of different relationships we try to use. Again, you have to look beyond the fundamentals. Fundamentals are very, very important. I use them all the time, but you got to look at technical analysis. You got to look at position. You got to look at sentiment. They're so important to the markets, and too many people, and we're in a situation where, well, again, we'll talk about this more. We'll talk about my macro picture and why I think the market is going lower over time, but why we also could see another sharp rally before the week is over. We'll have to see what happens because of the big Fed meeting tomorrow. So we'll see. But my point is that we want people to learn. We want people to give us to share ideas. But I'm there all the time, and that was the real point I want to make is that if I do a trade, you know about it. Okay, I don't show you some of my trades. I show you all of my trades, and I tell them when. It's not like I do a trade. Oh, looks like it's working, so I'll give them that one. No, when I do it, you know about it right away. Okay, or I come in, I say this is what I'm going to do, and then I do it. Okay, and then I'm going to sell. This is when I'm going to take profits, or I'm going to take profits on half of it, or I'm going to add to a position. Geez, I bought some here. Remember, we talked about nibbling on this. Well, now it's really breaking out, so I'm getting more aggressive now. But you know about it. I don't hear about it, and I don't know. Geez, I get a trade, and I get more aggressive about it, and let it run up, and have you guys come. No, you hear about it right when I do it. None of this delay, no delays, and there's none of this pump and dump stuff, I guess is my point. So that's number one. Number two, I don't get anything to churn your account. In other words, if you're doing trades, your broker may make more money because if you're doing options, you do still have to pay a commission, which you don't have to do in common stocks. But the commissions are a heck of a lot smaller in options than they used to be. So it's still a really good deal. But my point is that I don't make any money from this. So if you do 100 trades in a day or no trades in a week, it doesn't make any difference to me. And that's why it frees me up to sit there and say, like today, saying, hey, believe me, after yesterday's big sell-off, I said to myself, if the market's in tough shape, my sons can go on their own. I mean, they're old enough; they can handle no problem. I just wanted to be able to do it because Father's Day is coming up. But and it's just a great time to spend with them. I don't have any daughters, so that's why you wonder what the heck I'm talking about. But I don't, my poor wife. But we don't have any daughters. But anyway, so that guys, is my point, is that we're in this together. I'm not trying to pull it. I'm not pumping and dumping. If a trade loses money for you, it loses money for me, because I tell you exactly when I get into it, exactly when I get out of it. So that's very, very important. It's a great community.
Yeah, and I want to give a shout out here to Terry. Give a shout out to Terry, newest member of the Stock Pick Inner Circle chat room.
Great to have you on board here. Thank you. And I tell you, you're joining at a great time. Tomorrow's going to be, and again, there's a good chance. I don't want to get too worked up yet, because remember, the Fed meeting isn't until 2:00 tomorrow. We have the big Federal Reserve, FOMC, Federal Open Market Committee, but the Federal Reserve meeting, they'll have an announcement at 2:00, and then at 2:30, the Fed chairman will come out with his press conference. So tomorrow morning is probably going to be very, very quiet. Well, the one thing though, we do get retail sales. That is a number. If it's a weak number, if it's either really weak or really strong, the market could move. But though it'll quickly refocus on what the Fed is doing and saying, because a lot of speculation, and that's the thing right now, is there is a lot of speculation the Fed is going to go 75 basis points. They're going to be more aggressive in raising interest rates starting tomorrow. I think that seems to be what they're doing, because I think they did leak it. They want to keep people in the press, and got Wall Street Journal, got CNBC, and if those two guys are saying it, I think they're and a couple others that they're getting confirmation. And I don't want to overstate this, because I'm not being conspiratorial. It's the right thing to do. I mean, that's what. People say they leak things. The government leaks things here or there. That's a big problem. Well, first of all, the Federal Reserve is not a government entity, by the way, but that's a whole other issue. But the point is, when they do that, they're not doing it because they're trying to screw people over. They're not trying to make something look better than this. They're trying to help the market say, hey, we're going to do this. Let's not shock anybody. So the point is that we're going to be really active. This is going to be, we've made some real good money. Rodrigo will tell you, some real good money around these Federal Reserve meetings. And I think this is going to be another opportunity this week.
Yeah, no, absolutely, man. I have personally made some really good money in that chat room. Of course, I'm busy here working and stuff, but that chat room is like another level. But all right, so we have a couple members here. Monty saying Matt service and assistance is well worth the price most, especially in these difficult times. Thanks much, Matt, from Monty. Then we have Jay Trades from the chat room, says this is the best I spent in my life. I made my money back in 2 weeks. I was moving slow when I first got there. I've made 3,800 with Netflix puts and 8,100 with Tesla puts the next day this week. Congratulations to both of you guys. I'm glad that you guys in the chat room are doing well. Shout out to Matt, of course, like for hooking you guys up and stuff. But yeah, that's what happens in the chat room. But all right, so we trade options. You guys get it, right? Basically, Matt is giving you clear entries, clear exits, right? You know exactly when he gets in, when he gets out, full transparency. You cannot miss it because it's posted there. And we have a separate chat room where only Matt can post. Right. So that you can't miss it, right? And then we have a separate one where everybody's talking there, back and forth, including Matt. But look, guys, we also look at different sort of stocks. And for example, like right now, there's a whole reshuffling. In like what's happening with the energy distribution in Europe because of what's happening with Russia there. I saw this little stock here that caught my attention here. IMPP. It's like Imperial Petroleum. And this is a stock that I think it's like a 60, 70 cents. It was like $1, but I think that this company might be able to do well considering they're in Greece and they're pretty much in that oil stuff, right? Oil transportation stuff. But Matt, what do you think is going to happen with all of that? Because I look at all that stuff in Europe with oil, like the gold rush, like when everybody was rushing. But there's going to be winners and losers, right? But considering the sanctions on Russia, trade routes from oil that had 50 years or more are basically have to be destroyed, and new routes have to be found and made, right? New deals, that sort of stuff, correct?
Well, absolutely. This whole situation, what's going on in obviously this Eastern Europe, the war in Eastern Europe has now become a war of attrition. And it's been that way for several months now. And that means it's going to drag on. That means so let's get this so you can see it better. That means that these sanctions are going to be with us for a long time. And that's going to cause a problem. That's going to remain. So I'm bullish on energy prices. I'm bullish on energy stocks in general. And Imperial Petroleum, I don't know it as well as others, but there's no question in my mind. They reported earnings today, and they were good, really good earnings. I said, well, what do you mean they were good earnings? The stock went down. All the energy stocks went down, or pretty much all the energy stocks went down today. Even though it was weak, it really wasn't really weak. They got crushed yesterday when oil was flat. Well, why is that? Because it's becoming, how could it possibly go down if oil was flat? Well, it's because it's becoming a source of cash, a source of money, source of funds for people who need to sell. In some cases, it may be a mutual fund who's gotten redemptions, and they're like, well, I don't want to sell the stocks that everybody's selling because I'm just going to crush, stocks and knock down my own positions. But I'll tell you, there's one thing I can sell that's actually where there's buyers out there, and that's the energy stocks, because it's the one of the few areas in the market right now that has a real good fundamental story. That's why and again, it was funny because I have been saying over the last week or so, remember I showed you that XLE put that we bought? I mean, everybody's saying, wait a minute, you've been bullish on 2 years. Now you're telling us we should sell them and we should make a negative bet? And I was like, it's a short-term bet, but I think it's going to work. And of course it has. And it's still working right now. These stocks have to come down a little bit. But the situation in Russia is not changing. Yeah, like I said, in Greece, a place like that, who can come up with these answers for this problem that is obviously a growing problem in Europe, and it's not okay. Well, once we'll have this ceasefire, something will happen, and oil will go down, and everything. It's like, first of all, the ceasefire. If we get a ceasefire, they're not going to end the sanctions because it's just like what we're just going to let them say they took over half of Ukraine and then then we're fine with that. I mean, there are actually a few people are saying that's what they should do, but we're not going. That's not what's going to happen. That's not realistic. The sanctions are going to be on for a long time, and Russia and Europe needs to. And even if they don't, even if everything gets fixed tomorrow, okay, which isn't going to happen, but let's say some miracle it does. Well, this is the big scare. Europe has to figure out something is now in the middle of figuring out how they're going to become much less dependent on any one spot, especially Russia. And look at this stock now. So what you want to be watching on this, it's a 60-cent stock. And that's the one thing is that we're not going after, and we have done a couple of them. Mulan, which is the EV, the electronic vehicle company. We've gotten that one was at 80 cents. But you don't have to just play these penny stocks, and they're not 1 penny stocks, but to try to make money in market. There's too many people say some really speculative names, but again, some of these speculative names are very, very interesting. And look at this. 1, 2, 3, 4, 5 days in a row. This yellow line, that's the 50-day moving average. It's gone right up to that line and actually gotten slightly over it a couple of times and then come back down. Okay, one of these days, this stock is going to break back up above that, break above that 50-day moving average in a meaningful way, and it's going to take off. All those momentum algorithms, those algo traders, that's going to click into their computers, and off this stock will go. So that's what I'm going to be watching on this one. We get above that 50-day moving average. It has to be by more than a penny or two because we get, like you said, it got above it very slightly a couple of times here and here. I don't know if you can see that, how well you can see that, but you can see how. See, it got a little bit above it. So we needed more than that. We're going to avoid the head fake. But once it gets up here towards $1, boy, this thing is going to run. And so this is one that we'll be watching very closely in the weeks, days and weeks ahead. And these are the opportunities that we're looking for. But you don't have to just do them in these penny stocks. You can, because we're trading in the options, and because these options all have, a lot of these companies have weekly options. We can buy the options, and whether it be calls or puts, and make a lot of money. It doesn't have to be in stocks that are trading for 3 pennies. And geez, I'm hoping they'll become the next Apple. These are some of the biggest companies in the world we've made money on, like Amazon. Amazon at one point was the biggest company in the world, and still very close to it. And so these are the types of things that we're constantly looking at for opportunities. And we looked in Japan. We've looked in the bond market through the TLT, which is the Treasury bond ETF. We've done it through the HYG, the high yield ETF, dollar ETFs that we've done, the UUP, which is a dollar ETF. And although we haven't done much there, there are also European banks. The Japanese yen has been getting just crushed. There's going to be some opportunities there. Wherever there's opportunities, we were able to jump on them. You can't grab everyone. There's every once in a while, be like, look at this stock, it's up 20%. Right. Well, we missed it. This is going to happen. But we're looking at all different aspects of the marketplace. I'm not an equity strategist. I'm a market strategist, and so I'm looking at all markets.
You're looking at the whole world. So here's the thing, Matt. Oil's at, let's say, it's like a 120, right? It's at 120 and China's been like closed for months, right? So like, what happens when they actually reopen, man? Like, does that I mean, it just gets like, does the picture just get more bullish for oil? What's the limit? And I mean, what's sustainable, right?
Well, yes, okay. So there's a couple aspects of this. Number one, when was the last time? I mean, I don't know if you're aware of at any time, but I'm saying, when was the last time? The last time was never that the Fed was able to really knock down oil consumption through demand destruction by raising interest rates. Okay, they create demand destruction, but people still need to heat their homes. They still got to drive to work or drive their kids to school, what happens to be. Okay, so they have to spend that money on those things. And the key on the fundamental side is we do not have the capability to crank up production, okay, because we have not spent any money on it. And you look at the CEO of Chevron just recently said, why would we spend money to build a new plant when every government in the world is telling us that they're not going to, because, we build a new plant, how much money that costs? That's billions of dollars to build that plant. We need to know that we can make money off of it for 30 years. You're telling us we can't. So why would we build it? We might make money on it so that's number one. So they're not going to build that. But number two is because they've also really discouraged them from investing on anything but new energy. That's fine, but the problem is the technology isn't there to rely on new energy in a major way. Believe me, all of us would rather we get away from fossil fuels tomorrow. It's not there. It's not possible. That's one of the reasons why I turned so bullish in October 2020. I was pounding the table saying the capabilities aren't there. We have not spent the money on it. And the government, and especially the Biden administration, I'm not trying to play politics here, I'm just saying the facts. They're like, we do not want you spending that money. We cannot, people say, well, so the Saudis can suddenly open the spigots. They can't. They can only do it so much. The US, we cannot. We cannot, and not only that, because they wouldn't let those companies update their refineries. Even when they get more oil in, they're not going to be able to refine it into gasoline or any other products as quickly as people think they can. And so oil prices are going to remain higher. And people say, what about Europe? Don't worry, we're going to get these floating LNG things. LNG stands for liquefied natural gas, and they're going to be, well, that's fine. But what they're going to do is they're going to take those floating platforms from someplace else in the world, okay? Because we can't we don't have the capability to get any more natural gas and liquefied natural gas or any other kind of natural gas. So yes, in other words, great, we'll be able to get it to Europe, hopefully, so they won't freeze to death. But we're still taking it from somebody else. So the supply-demand issue worldwide equation is still going to remain the same, and oil prices and natural gas prices are still going to remain high. So, I mean, the smartest guys in the world are talking about $150 oil. I think they're right. And, again, it won't go in a straight line. That's why I was negative on the energy stocks recently. But, and again, it was purely on a short-term trade. And I said that right from the start. I was saying, this is a short-term trade. We're going to buy some puts in the XLE. We're not selling the stocks in our portfolios. Still love Chevron. We bought Chevron when it was yielding 7.5%, and that's just done beautifully. And I said, I'm not saying sell that. I'm just saying let's not chase it. Let's buy some puts. Let's hedge it. Let's trade around that position. That's it. So many people, it's like I got to be in stock or out of stock. No, you can have a long-term holding and make negative bets on it every once in a while in the options market to trade around we call it the business trading around a position and maximizing our returns over time. And that's again a big part of what we try to do in the chat room.
No, absolutely, man. I remember that. You were talking about oil, commodities, when everybody was, looking at growth stocks, and then at the same time you were saying you were already, looking ahead. So I remember when you were talking about Nadella from Microsoft that day, you talking about margin debt, and then that was the day I think where like things just started going downhill for the market.
Yeah. I mean, that's when the Nasdaq peaked. When and again, Mr. Nadella is a brilliant, and I've said this many times. I've said it on CNBC. I've said it on Bloomberg TV. I've said it here. I've written it many, many times to all our customers, institutional customers from Miller Tabak, etc. I say he's done a great job. The insider selling he's done. There's nothing wrong with it. He turned this company around. This was one of the best companies in the world, and then it hit a big mediocre patch, a patch of mediocrity for about 10 years. He came in, what was it, about 10 years ago, and turned it around again. Now it's back to being one of the best technology companies in the world. He deserves all that. He deserves the money he's made. Okay, because he's made it for his employees. He's made it for his investors. But he saw where the stock had gotten. It had gotten too expensive. And then also he saw what the Fed was going to do. And that's what I was saying. I said, the Fed is changing. Don't fight the Fed. Do not fight the Fed. And they're about to change. The market's going to go down. I believe that's what he saw. And he saw his stock was way too expensive. And I don't know. I can't say for sure what his reason was. But what we do know is he sold $374 million of his own stock, of his personal holdings, 2/3. People do not sell that kind unless of shares of their own personal holdings unless they know it's going to go down and stay below that level for a couple of years. Doesn't mean the stock's going to go down for a couple of years, but it's going to go down and stay down for a couple of years. And again, it's something I've mentioned many, many times. Whenever insiders sell, Goldman Sachs took their company, partners went public in 1999. They saw what was happening in the tech bubble, and sure enough, the market crashed the next year. Blackstone, the big private equity firm, did the same thing in 2007. Three or 4 months later, the stock market topped out. They went public. Their partners sold all this stock to the public, and they made out like bandits. We go on and on. We get to all these people where the smart people, the insiders, sold, not because they didn't believe in their company. Goldman Sachs has thrived since then. Since 1999. Blackstone has thrived since 2007. But what they were is saying, we're taking some chips off the table. We don't want to be a partnership anymore. We want to cash in some of our chips. And that's what they did. And it worked out really well. And then we just, like I said, but the other thing was that people say, wait a minute. Well, you're trying to say that because Goldman Sachs went public, they had an IPO. Whenever a company goes IPO, that means you should sell? No. They had been a private company for a long time, for 100 years. Blackstone had been a private company for 25 years. Now we got, but other companies are like, no, they've been private for just, they just started up. They're 3 or 4 years old, and they go public. Well, they need the money. They want to grow. They're a growing company, and they need more money to grow even more. Nothing wrong with that. So just because a company goes public, it doesn't mean that the insiders are selling. In fact, you look at Microsoft when they went public. Bill Gates only sold $1 million worth of stock. I mean, he said, I'd rather be buying on this IPO, not selling. It was the venture capital, the guys who gave him his seed money. They were the ones who wanted to sell. And he says, okay, I'll sell. I'll give you your money. I'm going to keep mine in the market, in the stock. And of course, he became the world's richest man. He's not anymore, but he's, and he has sold some over time, but that was all planned. I mean, when you have $80 billion in one stock, you got to diversify somehow. So the point was, he wasn't really selling. Okay. And so don't say that, well, anytime a company goes public, it means insiders are selling because they want to get out. No, they're just trying to, as he said at the time, I needed $1 million because I'm still living in my mother's garage. He needed to buy a house. But you look at these things, my 40 years of experience, I saw what was going on there. I called the top and I nailed it right. I mean, let's look at here's the Nasdaq. Let's see, NDX, which is the Nasdaq 100. Let's just go, whoops, index GP. All right. Here we are. Guess what this is? That's Thanksgiving right here, the week of Thanksgiving, the 20th right there. That's where he made his first sale in Microsoft, and he sold half of it there, and he sold another third of it there, and it's gone down ever since. And all you have to do is do the math. The stock is now on new lows. The guy has done absolutely nothing wrong. It's one thing if a guy doesn't, if he's been lying about about their they've been lying about their there's some sort of an accounting scandal. They've been cooking the books. They've been faking all their shit. No, none of that. Everything's out there. If we found out 3 weeks later that they're about to, announce, a major lawsuit, they're going to, nothing. No, he just said, the stock's ahead of itself. I'm taking some profit. Down 30%. Let's do the math. Okay. I should probably be able to do this in my head, but I can't. So I'm going to do it. Boom. 4 times 0.31 equals, boom. The guy saved himself $115 million because he sold here instead of holding on. That's how much money, that's how much less his net worth would be. He'd be worth $100 million less, but he sold that stock. Now, don't get me wrong, he's going to get more stock at the end of this year. He'll get a bonus, he'll get a salary, and part of his bonus will be more stock, and he'll and because he's so good, the stock will go up. And don't get me wrong, there's going to be an unbelievable opportunity to buy Microsoft in the next year, the next 12 months. But this guy sold, and that's how I saw it. I'm pounding the table saying, and people say, "What are you talking about? Microsoft, great company." I'm like, "Yeah, it's a great company, but there's a difference between a company and a stock." Okay, sometimes a company's stock is way ahead of itself. And as we saw in Apple Computer last year, when the stock market went up in a straight line in 2021, Apple, even though it had a great year, still had 3 corrections of 9 to 18%, I think it was. So you have these hiccups. Amazon's changed the world the last 25 years. They've had 24 pullbacks of anywhere from 20 to 60%. Okay, nothing, because sometimes stocks get way ahead of themselves, even way ahead of the company's fundamentals. So they have to come back down. Look at what's happening with Tesla, etc. You can't name a great company that hasn't gotten too far ahead of itself at times. So I was not betting against Microsoft or Mr. Nadella. I was betting against the stock. Okay, and again, we're going to have a great opportunity to buy the stock in the future. Because at some point, when you get the baby gets thrown out with the bathwater, the market's really going to have a tough time. But just because we've been going on for an hour here, I just wanted to touch base on my macro outlook and why I think things are going to continue to be really volatile all summer long. Now, does that mean that the first week of August might be really quiet because we'll be kind of moving out of earnings season and into vacation time? And so, yeah, we'll have some quiet. And that, again, like I said earlier in this call, there are times when I'm like, I don't want to do something. All right, there's no reason. Don't do. Sometimes they say, don't just sit there, do something. Well, sometimes in the stock market, don't just do something, sit there. That's the right thing to do. And if that's the case, we won't do anything. We'll just kind of sit back and watch. But the whole idea is to get the trades, taking advantage of them, and we've been able to do it on a consistent basis pretty much most weeks. Not every week's been great, but boy, some weeks have been really good, and we've had a lot of them recently, and a lot of them over the whole year, really. The opportunities are there. But what's going on? Again, to go back to what I was trying to say, was that this whole thing with the macro situation is that the stock market was pushed way. This is something that nobody was talking about. Not to take that back. Some people, Mike Wilson from Morgan Stanley was one, but most people beginning of the year were making all these excuses to why the Fed was the Fed tightening wasn't going to be a big deal. And I said it's going to be a big deal because it always is. The market, they just make stuff up. I don't know what the heck I said. Oh no, so the stock market usually acts well after the Fed starts tightening. I'm like, what are these people saying? That's just flat out wrong. Now there has been some times when the Fed started tightening and there was a big delay. Sometimes there's a couple of months. There has been 1 or 2 times where it's actually been over a year. But the key thing is, it's always led eventually to a sell. Now, but the key thing for us this year was that whenever the market is expensive, and this was the second most expensive market ever at the beginning of the year, you knew it was like there was not going to be any delay. Every time the Fed starts tightening in an expensive market, when valuations are really high, the market goes down pretty much immediately. So we knew this was going to happen. And again, they pushed that, they added that emergency levels of liquidity, and they kept it there long after the emergency ended. So that the whole idea was like, we knew that the stock market was trading way above its the stock market was here and the fundamentals were down here. We knew that, but we were okay with it because they were just trying to keep things together as we got through the pandemic. And eventually we thought they would catch up. Well, the problem is it started going here and the emergency was over. They kept adding the liquidity and it never couldn't play catch up. In fact, they got further away from it at 22 times earnings. So as I was saying at the beginning of the year, it doesn't matter if we have it. I was saying it doesn't matter if we get a recession or even just a slowdown. We don't even need a slowdown to get this market to drop 15 to 20%. I was very adamant about that. And that's exactly what happened. The problem was, though, and I said this at the beginning of the year as well, is that the stock market, because of what Ben Bernanke instituted, or really you could say Greenspan did, but really Ben Bernanke said, I don't want the stock market to be a indicator for the economy anymore. I want it to be a tool to impact the economy. So with the stock market coming down, it was going to slow the economy, which means earnings estimates had to come down, and they haven't started coming down yet. But then, of course, so we were saying the economy was going to get slower. So that would mean that we'd get a correction of more than 15 to 25%. All we've done so far is priced in the ridiculous amount of overvaluation that the Fed had pushed into the market. The Fed and other central banks had pushed into the market for the last 2 years. Now we've got to deal with the slowing economy. The problem is slower economy and higher inflation. The problem is the war in Ukraine, especially the war in Ukraine. And as soon as it happened, I said this is a big problem because this is supply-driven inflation, demand-driven inflation. That's another thing. Some well-known people saying inflation is good for stocks. What planet are these people living on? Demand-driven inflation is fine because, first of all, demand-driven inflation isn't very strong. It's very gradual. And people don't mind it because they're getting better jobs, making more money, and they can afford the inflation. They don't care. But when it becomes supply-driven, like it did in the 1970s when the OPEC embargo took place and shot oil prices through the roof, then it makes a big difference because people can't afford the price increases. In demand-driven inflation, they can. So what happens? They have stagflation. People say, oh, well, the odds of raising of stagflation. We're there, guys. We're there. And this crap we hear about people saying that we're not going to have a recession, we're almost there. Well, what they say is, well, we're not going to have it this year. Or well, we're only seeing the odds of recession rising. Come on. It's these people are paid to be bullish, and you've never heard the CEO of Morgan Stanley, who is James Gorman, is a really, really top guy. I was at Morgan Stanley when he was there. We were in different areas, but his reputation was impeccable. He's done an unbelievable job in Morgan Stanley. And he said 50-50 chance we have a recession now. When the CEO of a major bank saying 50-50, he's really meaning we're basically going to have one. I mean, he's 100%. And with Goldman Sachs saying 35%, they're really telling us they think it's 85% because they can't, for their job security, they can't be calling for recessions. Nobody on Wall Street calls for a recession until we've already in one. Okay, it's just the way, it's kind of a joke. It's kind of an unwritten rule. But my point is that that's what we're going through now. We're going through that second half of the situation. And that second half, the slowing of the economy, has become much worse because of the war in Ukraine and because that war has become a war of attrition. Because all those sanctions that have to stay on, that means food prices are going to stay higher. That means energy prices are going to stay higher. When people are spending, 64% of Americans live paycheck to paycheck, okay? So if they're spending a lot more on food and a lot more on energy, that gives them less money to spend on anything else. Okay, and that hurts the economy. We're 75% driven by the consumer. The economy's coming down. Earnings are going to come down. The analysts look like idiots right now, and that's going to cause. Again, so in other words, we're trading at 17 times earnings. We're actually about 17. It was funny because just a week ago we're trading 18 times earnings. But either way, once those earnings come down, okay, we're trading 17 times earnings means with the PE ratio, the price earnings ratio, is 17. Okay, so the stock market's trading 17 times its earnings, right? Well, guess what? If those earnings have to come down, because those earnings estimates have to come down, it means that the stock market is still expensive. It's still trading at 19 or 20 times earnings. Okay, and so it has to come down more. And then we have the most leveraged market in history by far. Now, a lot of that leverage has come down, but it's the most leveraged market in history at the beginning of the year. And even though it's come down because people have had to deleverage to a certain degree during this downswing in the market, it's still higher than it was before in 2007. Okay, just before that, the great financial crisis. So that leverage has to be worked off more. And whenever you deleverage an over-leveraged market, the pendulum swings from overvalued, doesn't stop at fairly valued. It always swings at least somewhere into undervalued. That, in my mind, takes us to 14 times earnings or 15 times earnings. Not when you get some of these professors on TV saying, geez, 18 is close to pretty much fair value. It's like, first of all, it's not, because you got to go back more than just a few years. If you go back 50 years, fair value is much closer to 16 or 15%. Well, certainly 16%. When I got into the business, now interest rates were much higher. When I got into the business, 17% would have been considered wildly expensive. Again, interest rates are higher, but were much higher back then. But interest rates are up, and this is going to be a painful process. It's actually healthy and normal over the longer term. And my big thing is, like, so many people on Wall Street are saying, we'll help you weather the storm. We don't want to weather the storm. We want to profit from the storm, especially now that we have the tools to do it, and they're there. We can use them all the time. And I'm sorry to be preaching here. I just want to look at my time because I want to make sure I didn't drone on too long here. But the point is that we are going to continue to have big swings, a lot of volatility, and very strongly, that's my opinion, very strongly held opinion. And especially when you have all this leverage that has to be unwound, you get these big whip moves, and that's what's really when you can take advantage of the marketplace. That's all I really did talk about that. So I mean, even if we don't, I think there's no question in my mind we're going to be in a recession. I think the Fed knows it. I know the Fed knows that they're slowing the economy down, and I know they knew it when they started doing it. And the other thing, though, is that back in 2018 when the Fed pivoted. They didn't pivot because the stock market went down. In December of 2018, December 15th, they raised rates again, even though the market was getting clobbered. It wasn't until the high yield market started to freeze up. That's when they pivoted. So that's what you got to be looking for. Could the Fed, believe me, if the Fed does a major pivot, that is, when the facts change, I'll change. Believe me. And I'm going to go back and I'm going to show you something here. And it's to say, as bearish as I am, and I want to go over this here. I'm just going to look at my points where, okay, here we go. Okay, bang, perfect. Let's go ahead, let's start here. Okay, good. Now, we're going back to, remember we talked about, even as bearish as I am, and right now, and I was much more bearish earlier because the market was much more expensive and much higher. But look at this situation we were running into as we moved into late May. Remember, I showed you when we went out and we bought the TQQ calls and the advanced micro devices calls. And why did I do that? Because I looked at the situation. People were getting too bearish. Everybody's like, oh my gosh, the world's coming to an end. And I'm like saying, well, it might come to an end, but it's not going to come to an end all at once. And look how oversold the market was. And I pointed it out. Here it is. This is the RSI. Now, it did get more oversold in 2020, but that was during a global shutdown, okay? And I said, that's pretty unique. So I would think we're probably not going to get down that much. But see how it was just as oversold. Again, this is the weekly chart, not just the daily chart. The weekly chart was most oversold. It had been more oversold than it was in 2015, more oversold than it was at the low of 2018. That was a 19% correction. And much more oversold in 2015. And I just said, it could get more oversold because it did back here, but I doubt it will because we're not completely shutting down right now. So I said, we ought to buy some stocks, okay? And I've been bearish, been making all this money on the way down. I completely changed. I'm looking for a short-term rally. It worked out beautifully, okay? What else? But it was like, just because of one side? Well, no, look at the Nasdaq. Same thing. It was just, in fact, it was just as oversold it was in 2020. Okay, again, all these different sell-offs on a weekly basis. I knew that this thing, I said, there's too many people are bearish and it's too oversold. Yeah, okay, look at now this thing what we call the Bollinger Bands. Okay, what are the Bollinger Bands? This is the 20-week moving, 20, not 200, 20-week moving average. And this green line or greenish yellow line, that is when it gets more than 2 standard deviations below its 20-week moving average. And the purple line is when it gets 2 standard deviations above that 20-week moving average. And this one got ridiculously oversold. It was down, it was more than 2 standard deviations lower, 2 weeks in a row. And I went back and said, look what happened the last couple times that happened. It only happened twice in the last 5 or 6 years. It happened here at the end of 2018, the market rallied. It happened here, during the pandemic, market rallied. I figured the market would rally there. And again, that's why we went long those plays. The same exact thing for the NDX, which is the Nasdaq 100. Same thing with these Bollinger Bands charts, okay? And he even talked about the high yield market, how it had gotten ridiculously oversold, okay? The HYG ETF. And I also talked about the transportation, talked about the retail ETF had gotten completely oversold. This is again late May. And the consumer staples, the consumer discretionary name have become. And I again, say, wait a minute, Matt. You think the consumer is getting much weaker, even though too many other people, a lot of other people on Wall Street are saying the consumer is still fine. I was saying, no, they're not. And I showed reasons why. But I did say, even though I am bearish, intermediate, long-term on consumer-related stocks, they're oversold. They have nowhere to bounce. So you have the S&P oversold, grossly oversold, the Nasdaq oversold, the XLY oversold, the XRT oversold, the high yield market oversold. The market's got to bounce. And we went in. And even though it went again, we ignored the fundamentals for a short-term trade and made, like I said, it was a 400 or 500% on both AMD and both on individual stock trade on the options and on the ETF options. So that's what we're trying to do here. That's what I'm at least trying to do is take advantage of this situation. It's kind of a once in a lifetime opportunity, but it's going to be with us for a while, which is great. And it's going to be a long, slow process because they can't, if they did it all at once, if they tried to, raise rates, they take it to 10% by the end of the year. Well, of course, it would crush the economy. They can't do that. They have to do it somewhat gradually. It's going to be a stair-step fashion. That's what the stock market is going to decline in a stair-step fashion. And then when it finally comes, when it ends, I'll tell you, it's funny because I'll never forget in 2009, and we were May in 2009, and what's his name? The billionaire out of Europe, but he said that it was the biggest suckers rally of all time, and I said, no way, this market's got a lot further to go. Now I didn't know it would go up for a dozen years and go as far as it did, but I was saying, no, we got to stick with this. But the key is when the market it goes through a bear market, and that's what we're in right now. Okay, we're in a bear market. Officially it was this week, but we've been in a bear. I've known that, and I've been saying it's been a bear market for months. Okay, the whole point was what happens in bear markets is they finally end when finally people say, I can't take it anymore, get me out, and they sell, okay? And they sell at the exact wrong time. That's when we're going to be buying. Why? Not only because we have the money to buy, okay, number one. Number two, we'll have the confidence to buy, okay? Confidence is so important to investment. That's what we're going to be playing with, using that confidence. And the thing is, what's going to happen at the bottom? You know what happened between 2009, the absolute bottom, and 2012? Money flowed out of mutual fund. The ETFs weren't as big then. Just flowed out every time. Oh my God! I finally made some of my money back. Get me out! And that's what all individuals were doing. All this money was flowing out in the market, going higher and higher and higher. And because the hedge funds, all these guys were coming in, they knew what was going on. That's why I don't follow money flows as much as a lot of people do. In fact, I don't feel that they're very helpful at all. They can be on a very short-term basis, but the point is that that's what happens. What they're going to do is they're going to sell at the bottom, and then finally they're going to say more than they should have, and they say, I'm never going to buy another stock again. And the market's going to go up 10%, and they're going to sell more, and it's go up another 5%. And what we're going to be doing, we're going to be buying at the low, and then when it goes up 10%, we're going to buy more while everybody else is selling, trying to say, oh, finally I got some of my money back. And we're going to be buying more, and we're not going to care because we bought something at $10. Now it's trading at $20, and we're saying, great, our average price is 15 and it's at 20. We have a winning trade. We cannot lose. Okay, unless they pre-announce in the stock, which is possible nowadays, but $20, it's like the stock starts going down. I'm going to use my stop at 16. Boom, it gets to 16, I'm out, guaranteed profit. Right? That's why you never want to buy on short-term trades. Sure, you can buy a little bit here, average cost pricing, and you can do that with stocks would start to get really, really inexpensive. And that's what we've seen like Meta, Facebook. That's getting quite inexpensive. Those are the types of things you can start doing. Average cost average when you buy the stock down, lower over time, because it can't go a lot lower. But dollars, it's called dollar cost averaging. I couldn't think of the term. That's not what you want to do in an active trading account. And the longer term account, you can do that. And you need to be careful there. In your trading account, you lose more than 10%, get out of the trade. That's one option. You give yourself 20% or even 25%. But if you're buying a stock and you're buying it because you think it can go up over the next 6 months and it goes down 10%, get out. You were wrong. Your timing was wrong. It's okay. Look for another reentry level. Get out. You have to cut your losses. Okay. Cut your losses and let your winners run. That's so important. But Mike, again, going back to what I'm saying is that if we look at these things, we can see where the long-term view, the short-term view can be in conflict with one another. And too many people say, well, you know what you're talking about. I mean, you're saying this is going to happen this way. It's like you're talking out both sides of your mouth. It's like, no, I'm telling you that long-term, energy stocks look right. This like a week ago, I said long-term stocks, energy stocks look great. Short-term, they look like they're going to hit. And sure enough, the XLE, the puts we made, the XLE made a lot of money. Now, I will say, I do want to admit, because not every trade works. There was I was a little early on it, but the initial trade I put in on it wasn't, again, because I wasn't too sure about it. I put a small amount of money into a trade in the XLE puts. Didn't work out. I didn't care because it was such a small amount of money, and I had taken some profits from another trade, and it's like, no big deal. That lost money, but as it looked like, but we kept rolling it out. Then kept rolling out. We rolled it out to the next week, add a little money to it, and then it made. Believe me, we made more money than we lost because we grew the trade. So this divergence where people saying you got to think one way because you think it's long term. This is the case. Therefore, you must think short term. That's why short term traders can make money, because those long term guys can't think that way. They're all thinking theoretically, and that's of course that's kind of a pet peeve of mine, where too many people spend too much time in the textbooks and not enough time in the real world. And that's why I think we've been so successful doing the trades, is because I've been able to I spent all that time at a trading desk and not in a not just in the theoretical world and looking at everything 3 to 5 years out. That's great. People, I heard it today again. I'm talking about the next 5 years. I don't care about the next 2. That's fine. That's fine. And if that's all you want, then you shouldn't be doing it shouldn't be an active trader. You have that long-term bucket and just keep it there. That's fine. But even in that long-term bucket, you should be raising cash. I've been saying, people saying raise cash and get defensive. I was saying that in December. I was saying that in January, February, March, every single time. And one of the few people who were saying it, that's really about there. But anyway, the other thing I just talk about again, just a little thing on a little commercial here. On Friday, I'll be on CNBC in the 2 to 3 o'clock hour. I don't know. I was actually scheduled for today, and then I asked him. I said, "Geez, I got this chance to go with my sons," and so I'm going to be on Friday between between 2 and 3 o'clock. So look for me there. And if you haven't seen me, I'm there. CNBC or Bloomberg TV at least once a week or so, and also do TD Ameritrade Network and Yahoo Finance, et cetera, and CNBC Asia, which I'm on all the time, yeah. So that's just so you know, they're just there, and I just a couple other things to talk about. One other thing on the macro. Oh, let's go bit. I just want to talk about the bank stocks. Boy, no. What we try to tell people, help people we try to educate people. And again, a lot of these people say, "Oh, wow, you're so freaking smart." I'm not trying to say I'm smart, but I've been doing this stuff for 40 years, and I do know there's a lot of rules on Wall Street that people think are right, and they're just wrong. Okay, and one of those is that interest rates, when interest rates go up, it's bullish for bank stocks, and that's not the case. But I do understand why people think that, because usually when when long-term interest rates are going up, that usually you have a steeper yield curve. Okay, but now shorter-term rates are going up faster than longer-term rates, so the yield curve is inverting. And why is that important? And it's like, well, wait a minute, interest rates are higher. That's good. They can charge more. But it's like banks, they loan out money. In other words, they take in money. Okay, they take in money through their loans. They give people loans, and people pay them their interest at the long-term interest rate. They pay their depositors at the short-term interest rate. So they're taking the money at the long-term rate, which is usually higher because you usually have a steep yield curve, and they're paying it out at a low rate. So they have, that's their margin, nice big fat margins. They call them net interest margins. So the margins that you hear about, that NIMs, NIMs, net interest margins. But when that yield curve comes like that and suddenly short-term rates are higher, it actually costs some money. Okay, that's what we're facing right now. We have a steep yield curve, which again, I didn't look at it this morning, but let's just yield curve 2Y10. This is the spread between the yield on the 2-year. So we're down to 3 basis points. It did dip into negative territory this morning. That's why I saw it, and I thought it might have done so. But basically, it's a flat yield curve. That's not good for banks. Okay, so the stuff for you people saying interest rates are going up, so that's great for banks. That's not great for banks, and that's why we were able to make some money just a short time ago. It was the last week or the week before. I think it was last week in the Bank of America push. Now, Bank of America. Unbelievably, it's a great company, unbelievably well-managed company. And so why did you choose Bank of America? I mean, why didn't you go for one of the others? Well, JP Morgan, I was more concerned about JP Morgan, but the problem is JP Morgan's a $100 stock and Bank of America is a $30 stock. So their options were cheaper. So, and again, they say they're cheaper on the technical valuation level, but you could buy more of them. I always like to buy, if I can only buy one, that means great. I only have one chance to buy it, one chance to sell it. If I can buy 10, then when I go to sell it, maybe I can sell half, and then maybe let the rest of it run a little bit, so I can kind of trade around it and get a nice average price. If you only buy one, that's why it was so tough to trade Amazon's options, because they're so expensive. But the point is, now we're looking at. Remember, I told you, I think we're getting to a market that's going to bounce, could bounce later this week. Look how it's getting oversold now. So we want to be looking at Bank of America. We were buying puts in it up here. Now we're going to be thinking about buying calls in it at some point this week. And again, I don't mean to be rambling here, but we do want to talk about what's coming up with the Fed meeting. We got the Fed meeting tomorrow. I'm sorry, the Fed announcement. The meeting started today. The announcement tomorrow. I do expect about 75 basis points. I'm laughing. My dog's here dragging his little blankie around here. Oh my gosh, now my dog got a blankie. But anyway, it's a blanket he sleeps on. Anyway, so we had the Fed meeting tomorrow. Again, the 2 o'clock announcement, 2:30 press conference. We'll see how that goes out. The last couple of times, the initial reaction for the Fed hasn't been the real reaction, so we need to be very careful. But I do think that they leaked this. The Steve Leisman, who's very well connected and a really, I think, a very top financial journalist, he's saying this goes 75 basis point. The guy from the Wall Street Journal is known to be somebody that the journal uses to leak things, basically. So I think that was 75 basis points. Maybe I'm wrong. But the point is, if they go 50 basis points, I think the market's going to get killed tomorrow. They need to go 75 basis points because they need to be looked at as being really aggressive on inflation. That will give us a short-term bounce. The problem is it won't last for very long. And why won't it last very long? Because the Fed can only impact demand. You know how much you have to knock down demand when the inflation problem you're facing is supply driven? Okay, I don't care how much they raise interest rates. We ain't getting more food out of Ukraine. We ain't getting more oil out of Russia. We ain't getting more natural gas out of Russia. Okay, we start having food shortages this summer and this fall, especially in the winter. Okay, and then you got social unrest. We got real problems, and that is a real issue. Not a lot of people are talking about that, but some are. And it's that's something to worry about. That's a separate issue there. We also worry about China and Taiwan. But the point is that if the situation that the Fed is doing, people sit there and they try to say, hey, look what Volcker did. He really well, yeah, Volcker did that, but we also had this thing at the same time called the Iran-Iraq War, and they started flooding the system with oil because they had to pay for their oil for their war, and so oil prices came down. So something could happen that could cause oil prices to come down. But but it has to be more than just demand destruction, because we have so much of it. As Rodrigo said earlier, China's reopening and stuff. This is not going to happen. We need the Fed is not going to be able to fix this inflation problem on its own, and that's the other thing. They're getting way too much blame for it. It did exacerbate the situation that they kept the liquidity spigots open too long. But the real reason we have inflation, the main reason, was because of the pandemic and all the supply disruptions. We didn't know it would take so long for that to come back, and we also didn't realize that a lot of companies would decide, I can't rely on these supply channels anymore. I've got to bring it closer to home. If I got to bring it closer to home, I've got to pay people to do it closer to home. That means my costs are going up. Inflation was always going to be higher, was always going to stay higher anyway. Okay, so that's not the Fed's fault. They didn't cause the pandemic. They didn't cause businesses to change the way they're thinking on supply chains. Okay, now they have the war. They had nothing to do with the war. You could say they could have seen it, but whatever. But they weren't going to make a decision. And remember, the Fed is not a government agency. That's important to remember. It's called the Federal Reserve. But if you want to know for sure, call them and say, I want information from you, and I'm demanding it on the Freedom of Information Act. And they will tell you very nicely, but firmly, we are not part of the federal government, so we do not fall under the Freedom of Information Act. So they're owned by the banks. That's just, so be aware of that. Anyway, but they're getting way too much blame for the situation, and but the problem is there's only so much. They didn't cause it as much as people think, and it's going to be much tougher for them to fix it. So this is going to be with us for longer. Larry Fink, head of BlackRock, he's saying inflation is going to be higher for longer. I mean, there's a guy, he's got a view of the world. My other favorite thing is look at what Jamie Dimon's doing. Jamie Dimon's warning about batten down the hatches. We have a hurricane coming. Okay, what did he do when he said that the stock market was down 15%? In 2016, we had another 15% correction. Okay, and what did he do then? He came out and he personally bought $26 million of JP Morgan stock. No, it wasn't a company buyback. It was his personal money. He bought $26 million. The stock bottomed. The day that was announced, I think he might have bought the day or two before, but the day that was announced, the stock bottomed, the stock market bottomed, and it went straight up both went straight up for 2 years. 2 years, okay? What did he do this time? Did he go in and say, I'm buying my own stock? No, he said, batten down the hatches, a hurricane's coming. Now, he did say it might be a mild one, but he also said it could be a really bad one. But my point is that, these people are saying that the inflation is it's going to come down, but it's going to stabilize at a much, much higher level. It's going to be harder than people realize, or have been realizing anyway. The sea change came on Friday. People are finally came last Friday with the CPI number. Finally come to realize we're not having peak inflation. And even when we do, when inflation does stabilize, it's going to stabilize at a much higher level than anybody has been thinking. That is not good for risk assets, okay? And therefore, we're going to have a lot more volatility for a period of time. And that's going to last, it could be certainly through this year, I think through the next 12 months minimum, probably through next year as well, which is great for trading. But when it does come, we're going to be able to take advantage of it. We're going to be able to buy stocks, and I'm not going to say like it was 1932 or 2009, but we're going to have one of the great buying opportunities of anybody's lifetime, and we're going to be able to have the confidence to know that it's going higher and not be selling all those people who are buying every dip. Well, they're going to spend like they did in 2009, 2010, 2011. They're going to be selling every pop, and they're going to be regretting it for years, and we won't be. So that's really kind of my stance. Sorry, I kind of pontificating and rambling there, but that's where I see things, and it's things in the chat room worked out very, very, very well. I think the next few days are going to be really critical. I do think we're going to see a rally. I just don't know where it's going to start from. Does it start from? Does it start? Do we got to buy the news? But I do think we start a rally at some point this week, one that's a substantial one, but it will be short-lived. It may only last a week or two. It may only last a few days, but we want to be able to take advantage of it. So I do see some, even though we've been not doing a lot of trading the last 2 days, mostly just taking profits on the trades we put on late last week. Right. We're going to be adding some as the rest of the week goes on.
So for all the folks that did join here, the chat room, what can they expect from the Tuesday session? Because I know you mix it up there sometimes.
Yeah, we did. Like I said, we try to do. First of all, make it educational. Like I said, we talked about this Fibonacci thing, this relationship, and how it works. And you could spend a semester talking about that, but we spent just a few minutes and we talked about that. Sometimes we talk about technical analysis, why, for instance, a head and shoulders pattern is something to watch. Technical analysis is not just a bunch of lines drawn on, it's on a page. It's fundamentally based. Okay, when you're always looking 6 months out, that it's forward looking. The stock market is forward looking. Everybody admits to that. Why? And I said, well, that's all technical analysis is. Okay, is that they realize, hey, the stock's moving first, and then the fundamentals play catch up on both directions, and it makes total sense. I mean, think about it for a second. If you are a company and you've not been doing well for a couple of years, and the stock's been doing nothing, and then all of a sudden your business turns around for whatever reason. You know, maybe you got to do product, maybe you got to do just the market for your product is suddenly turned up for whatever reasons, great. Okay, now all those people, remember we closed those 3 factories down and we laid off all those people? Well, now we've got to retool those factories, start them up again. We've got to hire new people back. And even if there's some of them are some of the old people we had, we've got to retrain them. So it's going to take 6 months, 9 months, a year for it to really show up in the earnings. Let's get to it. Well, that's great. And so individual investors, they don't see it until the earnings get better 9 months later. But you know something? The hedge funds and the mutual funds, the big ones, who have these army of analysts, they're not going to wait to buy that stock. Their analyst is going to come in and say, hey, Mr. Portfolio Manager, or hey, Ms. Portfolio Manager, this company, look at they're retooling their factories, they're hiring people. We've talked to their suppliers. They're buying stuff hand over fist. We're talking to their customers. Their customers love their product. Don't wait to buy it. It's buying now. Their earnings are going to turn 9 months from now, but won't wait. Buy the stock now. So, well, we don't have an army of analysts to talk to, individual traders. So what do? We rely on technical analysis. The stock's moving up. Something's going on. Let's figure it out. And that's why we use this. And the same thing happens on the way down, because people, they don't, it's like, it sounds like, well, what are you talking about? Things turn down. Well, people don't like managers or CEOs and other managers, they're people. They don't like to lay off people. They would rather not lay off people. So they drag their feet. Things are getting bad. But if you wait until they actually start laying off people, you've waited too long. But so that's why we follow the stock, and because we don't have 3 analysts who work for the company to tell us that things are getting really weak there. We can rely on technical analysis to tell us that. So that's something we do. And again, I'm sorry, I got a tangent there. As you can see, sometimes I do. But then we talk about macro situation, like I just talked about, what's going on with the broad market. We talk about relationships. Why is the high yield market an important market to watch at certain times, many times? Why the cryptocurrency market, like right now, why it's so important, because it's so much leverage in that market. If they get a margin call, there's not enough liquidity in cryptocurrencies to meet their margin calls, so they're going to have to sell stocks. And so tomorrow morning, if the cryptocurrency falls out of bed, I don't care what, people will suddenly forget about what the Fed's going to do for a couple hours. Don't get me wrong, and they'll have to raise money. Those cryptocurrency guys will get their margin calls, and they'll say, I know the stock market's going to rally this afternoon because my nephew is married to Powell's daughter, and told me that the market's going to go higher. It doesn't matter. I got a margin call. I've got to sell. I'm trying to sell this Dogecoin, but there's no liquidity. I can't raise the money I need. What do I own that I can sell that people will actually buy? I own Apple Computer. Okay, because they don't own U.S. Steel. That's for sure. These are people who are trying to be these people on the cryptos. They're technical, they're savvy. They're not looking at old stuff. They're looking at new stuff. So they're selling, but they do own Microsoft. They do own Apple, and that's what they'll have to sell, and the stock market will go down. So these, again, type of things that we're talking about, these different relationships that people don't necessarily follow. And people seem to, and then people can ask questions about a lot of different things. And so it really works out well. And I have my Bloomberg up, and so we go over all sorts of different charts, and the people really like to. And the reason why I do it on Tuesday rather than Monday is that lately, of course, things have been really, really active. So Mondays may have been a better time to do it. But I just think that in most cases, though, you come off of a Monday, you're not really sure how the whole week's going to do. Let's get a 1 day of trading under our belt before we really go into it. I don't want to do it late in the week because the week's over. Let's make some profits before then. So and again, just because I do it on Tuesday doesn't mean that we can't have some very important points that I make in the chat. And that's I say when this chat room, as Rodrigo said, it's scrolling all day long. So when I make a trade, I put it in a separate page, so that if you're off doing something else and you want to know, oh geez, well Matt just put a trade on. Well, it was 2 hours ago. But you don't have to scroll up and down through hours of and hundreds of comments in this chat room. You can just go to the separate page. Oh, there's Matt saying it was 2 hours ago. Matt, you bought this 2 hours ago, or is it still a good buy here? Yeah, go ahead and buy it. Or no, it was a good buy 2 hours ago, but now it's run way up. I'm sorry you missed it, but or at least don't spend a lot of money on it, whatever. But in that thing where I put my picks, I also put in some key points that aren't necessarily picks too. But I do kind of keep it small, so again, if you want to know what we're really trading, you don't have to scroll through lines and lines. You can literally pump it up and the most you'll have to scroll. You usually won't have to scroll at all. You'll see the most recent picks. But that Zoom call we do every week is one I love to do because it's also educational. I love teaching, and I love learning. I tell you, I've learned something every day, and I learned a lot from the people in the chat room. And that's one of the things we try to push very, very hard is there are no stupid questions. Don't ever be afraid to ask a question. If I can't answer it, or if I'm we joke around because every time I go get a sandwich for at lunchtime, the market goes down. It's the strangest thing, and everybody's just it's like we're all making a bet and the market's going up. Everybody's saying, or order it online. I haven't brought it to you. Don't go out and get a sandwich. But I mean, it's like anything else. It doesn't take me very long to get a sandwich, but it gives me the time to go offline. And of course, if I see something happen, I'll go right back online. But to look at some other things and do the research that you need to do during the day. We can only do we can do a lot when the market's closed, but we have to be looking at things all day long too. And so I tend to do that midday. But tomorrow will be a day where I won't be offline very long in the midday, even though the Fed will really be doing things after the Fed gives their call. But tomorrow's going to be an important day. We'll do some trading, and we'll do a lot of trading before the week's over. But anyway, we kind of rambling around here for a while, but Rodrigo, but if there's some names you want to go over or talk about, or any other general questions, I'd love to be more than happy to answer.
Yeah.
We're in a really, really exciting time in the marketplace, and it's been a very painful time for some people, but it's been a great one for us, and we want to be able to keep it going. And like I said, we're not relying. So, well, we've been successful in down markets because I'm a major bear. No, we have made money in both directions. And as you saw in that FXI, the biggest trade we made this year, the biggest trade we've ever made, was a bullish trade in a bear market. And so that's what we're constantly looking for, moves in either direction.
Right. No, absolutely. So, folks, keep in mind that the chat room, the 70% off is until midnight. I'm getting some questions about that. We went over some questions earlier, but it's until midnight, so you can get the deal with Matt. But all right, so we're gonna go over a couple stocks here before we finish. After that, I'll show you the chat room. But more importantly, we're gonna go over some stocks. If there is a trade to be made, maybe tomorrow, this week, or next week, Matt's gonna let the chat members know, right? So if there is a trade opportunity there, of course, right? So let's go ahead and start here with Tesla. Here, Matt.
Yeah, sure. So Tesla, of course. Okay, now one of the things is kind of funny because again, I was not on the market. I was off the desk for a while today, but boy, see this right here? See this little nice little rally? Elon Musk said nothing. I mean, he's very entertaining and he's a brilliant man. So I'm not trying to give, but boy, it's funny how the stock does well when he kind of lays off. This thing with Twitter is been painful. It's been painful, but it's also happening when the market's getting hit. So the key thing is right now is that you got to get back. And I've been trading above that, between 800 and 700. My concern is that I think it's going back and test those lows. This is, again, nothing to do with the company, nothing to do with Elon Musk. We were back in here, and I was saying that right in here, and well, actually it was more in here, and I was saying this stock could drop below 1,000. And there were a couple of people in the room saying I was out of my mind. And how could I say that about Elon Musk? I'm like, I'm not saying anything about Elon Musk. I'm telling you about the stock. Okay, the Fed is going to tighten, and this stock has got too much froth in it. It's going to not only is it traded below 1,000, traded way below 1,000. Okay, I think it's going to come back here. We have one person who's a very good trader, and she's looking for it to drop to $500. And I agree with her. I think it could go that low. But I do think, is it getting oversold? But it's got, it's this whole thing with, look at this, lower high, lower low, lower high, lower low, nothing. But here it looked like it was going to finally make a higher high. That didn't make it. And then, again, it looks like it's going to make another lower low. So be careful on this one. I do want to look at one thing here, the MACD chart. Now, having said this, that's on my intermediate call. But look at this right here. It's about to see another negative MACD cross. And what's a MACD? Excuse me here. I just got a little suntan lotion in my eyes. It was stinging me from because I put suntan lotion on today to go to the golf tournament. But see this, look what happened the last time. Okay, what is that? So first of all, a lot of people have sure heard about the golden crosses and death crosses. Golden cross is when the 50-day moving average crosses above the 200-day moving average. A death cross is when the 250-day moving average crosses below the 50-day moving average. You may have heard of this. It's kind of a common thing out there. This is a shorter term frame where you get the 9-day exponential moving average moving below the 12-day, or in the other case, when it moves above it. So when you see that cross, see what happened here? Got a negative cross, stock got hit. Let's say stock got hit without a negative cross. You don't have to have that. But here, negative cross right here, stock got hit. Negative cross right here, stock got hit. Negative cross, okay, it's not confirmed yet. So we don't know. See how here where it made a couple of head fakes and we didn't really, it went, street kept going lower, but we didn't get a full signal there. So don't be fooled yet. This might not happen. And especially because I'm thinking the stock market could rally later this week. You want to be careful. My kind of thinking is that if for some reason tomorrow the stock gets hit again, I think you probably test it slow and get a nice bounce. So I'm looking for this stock to bounce. I think the negative cross will come later. Maybe not a whole lot later. But I do think we're looking at a little bit of a bounce here at some point, either late this week, maybe starting tomorrow, and into early next week, and then maybe we roll back over, and it may last another 2 weeks, just like the last two big rallies had. The problem is that this rally was a good one. This rally was a very good one. This rally, some people were saying it was going to go a lot higher. It didn't. And so this is a fade. I'm just worried about it. So I guess my point is, you don't want to, even though we're looking at a negative cross, I don't want to be buying the Tesla puts right now because I think we could get this kind of late week rally in the market because the overall market's getting oversold and really overheated. Sentiment is just really, really negative. We'll get a little bounce, and then that'll be the opportunity. That's when we'll get the real negative cross. So if you want to buy calls in this one, fine. But I want to be short dated, I'm right now. I was thinking, if this stock can break above 18, believe me, breaks above 800, I'll admit I'm wrong, and it's going a lot higher. But it seems to me that the situation is not a good one. This, the situation with Twitter is just not good. It's taking his eye off the ball, and it's not what that's not what they need right now. But again, nothing means nothing about long term potential, but short term, it's going to facing more headwinds.
Okay, all right, and then we have well, I guess this is just energy in general. Like I guess that would be the XLE. I don't know which one you're looking at.
Yeah, I can look at or the XLP, but I'll look at the XLE, which is a good one. Now, this is, like I said, it's not oversold, but what I'm looking at is the 50-day moving average. See how you got a little bit below it there, but this yellow line. Let me get rid of some of these. Gotta get rid of the 100 days so you don't see it. Okay. See how, for this year, the 50 days provided good support. Could it get down to that level? Yes, it could, because if the market, so when the market gets hit again, whether, you know, again, the market get hit again tomorrow. I mean, tomorrow, but I think that'll be short-lived. The next big downdraft, when stocks get hit hard, the whole market goes down. That's what we saw this week. But this group finally became overbought. See how overbought it got with the XL and RSI. But I am a big bull that, remember, I talked about earlier about the we just don't have we do not have the capability to produce enough energy to knock down prices. Okay, so in a meaningful way. And it just doesn't look like this war in Ukraine is gonna be settled anytime soon. So worst case scenario, but again, if the overall market gets hit, which I think it will again after the next bounce, but as we move through the second half of June, and certainly as we get into the early months of July, that's going to produce a great buying opportunity in this group. So I am, I've already owned a lot of names: Chevron, Occidental Petroleum, Devon Energy, Schlumberger, all these names that I'm bullish on, I've liked for a long time, since, for over almost 2 years now. They're going to present another great buying opportunity on weakness. And but we still could have a little bit more weakness. So I'm, again, not backing up the truck yet. When it was right in here, I was saying, that's when I remember I turned negative. We bought some puts in the XLE. It worked out really well. I was saying for the longer term holders, don't chase in. You can cut back your holdings, but certainly don't sell them all by any stretch of the imagination. I'm still saying that you don't want to be cutting back in your big portfolio, but I want to be looking for it to get dip below that 50-day moving average before we get aggressive again. But I do love this. I do like this group. Love this group still on a longer term basis and an intermediate term basis as well.
Cool. Yeah, I mean, it looks like it's looking good. That chart definitely. And all right, next one we have Netflix.
Netflix, it's boy, this one's had such a tough time. The one thing though is here, let's see, okay, now look how oversold the stock got. You're like, yeah, well, a little bit of a bounce. Yeah, got a bounce. Well, fine, but for traders, look how oversold it got. For traders, that may not look like much, but this little thing from the oversold, yeah, 20%. If stock goes up 20%, the options go up several 100%. Now, the problem is that it's not as oversold as it was before. The good news, and this is one of the stocks I have to say that, no, sorry, that's not one of the stocks because I don't, it's not, I was going to say one of the stocks where I'm saying you should dollar cost average. I don't think that, because I was thinking that in a different stock. But see, the stock is finally starting to get somewhat inexpensive at 15 times earnings. They don't pay a dividend, so they don't pay you to wait. That was what was such a great thing with the energy stocks at the beginning of this year. I was pounding on the table, so we got to be defensive. And all these energy stocks were paying such good dividends. We're not getting that right now. So right now, but again, finally the stock's getting cheaper. This is one I say, sure as heck aren't going out of business. But this whole reopening, the closed economy and all that stuff that helped the stock run through the roof. I just think that it has to get more of a so before you really want to step to the plate. It's just too many lower highs and lower lows all the way down here. However, the key thing, if you can finally break above 200 or 210 in a meaningful way, finally get a high. We haven't had a higher high since November. Once you get a higher high, I'm going to feel much more confident about it. Or if it gets really washed out like it did here and here. And we're just not there yet. We're just not that oversold yet.
Okay. All right. Definitely. And let's see. Next, we have GOVX.
GOVX?
Yeah.
Okay. Okay. Let's see. Okay. Now look at this one. It's very interesting. Okay. On a technical basis, anyway. I want to make this thing a little bit less busy. What was the news out today? Because again, I wasn't in all day. GOVX. So maybe a new drug thing. Hold on.
I have no idea. Somebody in the chat room just put
it. Great. No, I'm talking to myself out loud. I'm sorry. Let's say, let's just see, because I see it saw a nice bounce today. So I just wonder, They filed to sell 21 million shares. And yet the stock, that was after the close. But the stock doesn't seem to be indicated down. I just don't see any other news. Well, anyway, they just filed a second. It looks like they filed to sell 12 million shares. So we need to be careful of that, number one. That's good to know that we know that news, because when it's just, it's simple supply demand. Whenever a company announces a secondary offering, IPO is an initial public offering, then they have a secondary offering where they need more money for, there's nothing wrong with that. But it does dilute the shares a little bit, and you need to be, that does create a problem. So what we're going to be looking at though now is what I like. See how this stock, the key right now, since I just wore this news may cause some problems. But one of the key rules in technical analysis is that when something becomes a key resistance level, and when it's found that resistance level is finally broken, that old resistance level becomes new support, and vice versa. An old support level becomes new resistance. But here, see how the 50-day moving average, starting here, it got above these, but right in here at the beginning of the year, it kept trying to break above it, and it couldn't, and it finally got hit. It saw a pop here in March, couldn't get above the 50-day moving average. Another one in April, couldn't get above it. Then it did. It exploded to the upside. So that old support became new resistance. And when it broke it, it really took off. Now it's testing it again. So it's old resistance, broke above it. It's now new support. It held it 2 days in a row. Will this news tonight? Let's look at another thing. I just want to look at Yahoo Finance. Hold on a second. I just want to see where it's trading in pre-market and the post-market after that news hit the tape. And since I have my Bloomberg is.
Yep. And then after that one, I think we got a Twitter. Well, I mean, I don't know. And then
yeah,
it's been an interesting takeover from.
Yeah, GOVX. yeah. We'll definitely talk. I'm not okay. I'm not a fan of this, but it's down to 337. What's the 50-day? I know. Yeah. So this news isn't knocking down the stock. So keep an eye on that. If it breaks below 130, below 118, it's a 50-day moving average. That's going to be a real negative sign. If it can break above today's intraday highs, the intraday highs today are 132. Oh, wait a minute. Yeah, 130. What did I say here? Because it closed at 142. I'm sorry, 160. That's going to be a sign that it's a successful retest of the 50-day moving average, and the stock looks pretty good. And then let's look at the MACD chart. Remember, we looked at the MACD chart on other things. Let's see if it's seeing a positive cross. And no, it saw a negative cross, but this negative cross is several days old, so it could curl back up. This is a concern, but see how many head fakes it had there. That's the other thing. Whenever you look at anything, especially RSI, if a stock gets, some stocks are really volatile, and it really needs to get deeply oversold before it turns around. Some stocks are not. And here's the situation in some stocks where the MACD chart isn't very compelling. And look at this one: positive cross, negative cross, positive cross, negative cross, positive cross. There's a million these minor little crosses that it hasn't been a good indicator. So the MACD is not. So on this particular stock, it's not a good indicator. I'm going to ignore that. But that's where you're watching. You can see though that 50-day moving average is key, and that's what we'll look at. And then Twitter. This is just a sheet show. What is he's got a 50. He's got a bid of over $50. The stock's trading at 37. Of course, he wants to get the price down. It's been a big mistake for him. It's one I'm staying away from. I'm sorry to say. If the deal falls through, again, the deal falls through, the stocks come down enough, that when it was up here, I was saying, stay away. I would completely stay away from it when it was up at 50. It was trade even in the mid. Now that it's back well below 40, how much will it really get killed, get clobbered if the deal falls apart? He's trying to wiggle his way out. Can he do it? I've heard both sides. This is something that it's hurting the price of Tesla. I'm just avoiding the stock. If he takes it over, it's not going to be at $50. Okay, and they've got plenty of issues. And if he can turn this company around, I'm not saying he can't, But if he can turn this company around, it's not going to be for a while. It's going to take time. So this stock is not going to shoot up. So I just see too many other opportunities and too many other areas in the marketplace for me to be. And I don't want to bet against Elon Musk either. So I'm not buying puts in it. It does have an underlying bid to it because there is that takeover out there, and he wants to make it happen, even if it's a lower price. So the downside is somewhat limited, but I just don't see the ups. I just think it's going to take too long before they figure it out. So I'm just staying away from the stock. There's just too many other opportunities in the marketplace right now. I'm sorry, but that's sometimes you just that's the attitude you have to take. Is it's just, we can't make things happen. And this one looks like it's going to be a long time before it's resolved, and that makes it dead money for a while.
Yeah, no, definitely about that one. It's definitely an interesting one. So let's see, we have Microsoft from John Yang.
Yeah, I mean, Microsoft, what I talked about earlier, it's what a great company. And again, Mr. Nadella has done an unbelievable job, but it's the stock, again, for a long term, I hate to say it, but long term, the stock's not cheap. And now it's no longer expensive, but it's not cheap. Where are we trading at? 25 times their forward earnings. That's again, it's okay, it's fine. And believe me, when the market really bottoms out, when the baby gets thrown out with the bathwater, probably sometime this fall, this is going to be a great stock to buy. But my concern is that because these big cap tech names that can continue to be sources of cash for margin calls and other things, and we haven't seen the end of those, it's going to be a problem. However, and it's a big however, as I mentioned, I think we could see a decent rally here sometime soon. Look how the stock's getting oversold. Now, it's not grossly oversold, but look how it got teared down. Look how much it rallied. It only rallied for a couple of weeks, but it was a very sizable rally. Look here. It didn't even get down there. Nice rally there. Okay, it looks like it's trying to hold that bottom at 240. Look at the rally here. That was that lasted for a couple of months, forget a couple of weeks. So this thing is getting oversold. This is a stock that we should be looking at to buy calls on at some point later this week. Beginning, if you'd rather, if it's a $240 stock, there might be some other ones that are a little bit cheaper. But this stock is starting to get poised. Again, it's made a number of lower highs and lower lows. It did make a slight higher high there, but not enough to get excited about and roll back over. But it has made its lower low. It's getting oversold. And, again, I won't be buying these tomorrow morning, but maybe late in the day tomorrow, or and especially if you get one more slam into late tomorrow afternoon or early Thursday, this could be a good one to buy. So even though I think it's got some more downside because it's not cheap yet, it's a great. And if you own it, if you bought it recently and you want to buy it here for your long-term account, let's say you don't own it at all. You want to buy a little bit here, go ahead. Don't back up the truck and buy a little bit every month for the rest of the year. And you'll have a good average price. And at some point it's going to go flying back up. And so on a very long-term basis, I like it, but on a very short term, I'm looking for a pop here. Intermediate term, I'm looking for lower lows. So I don't want to be overly aggressive. I don't want to be over aggressive right now. I still think we'll make some lows, but like I said, great company. There are going to be some opportunities when this market finally bottoms out that are going to be, you're going to be able to shift. Geez, I made nice big profits in this trading portfolio, and wham, I'm going to take a big chunk of it and load it into Microsoft and Apple and a bunch of other names. I would start rambling off names here, but names that I'm going to sit there and I'm going to hold them for 10 years, and they're going to, and they're going to run forever. And you're also going to put them into some names who's suddenly good, quality names who pay a real good dividend, and you're going to sit on their dividend. You'll collect that dividend for the rest of your life, and still keep money in that trading account. Yeah, so Microsoft, that's my feeling now. Kind of three different answers. Short term, looking for a pop. Intermediate term, I'm looking for lower lows. Longer term, it's great. It's a great investment.
Right. So Matt, look, there's this company. You and I talked about it. Coinbase, but they just announced that. I mean, a lot of these companies are announcing that they're laying off like 15% of their workforce. And so one of these places even stopped giving people their cash today, kind of like Robinhood, but without announcement, something like that.
Yeah,
Um,
this is pretty scary, and people are really worried about this, completely imploding. Now, the Bitcoin, I'm sorry, the cryptocurrencies, the ones that survive are going to do very, very well. But this is just, and I'm, I know I'm saying the same thing, and I hate to say the same thing everybody on Wall Street is saying, because I've been a lot more right when I play the contrarian. But sometimes the consensus is absolutely right. I think the consensus is right on this, is that it's just like what happened with the internet companies. The best ones that survive will do extremely well over the next 10 20 years. But they had so much liquidity pushed into them, they just got too far ahead of themselves. And also all that liquidity enabled too many to start up. And so this is what we're going through. Coinbase and this whole thing about them being able, because the all market has come down this year, one of their big selling points is that we're not just cryptocurrencies. We're going to all these other markets, but all these other markets aren't doing well. So, I mean, are you going to go, and use Coinbase for something other than cryptos when you're nervous about the overall market? No, I want to go to the New York Stock Exchange, or I want to go to the Nasdaq. I want to go to I'm going to call JP Morgan or Morgan Stanley or Goldman Sachs to do my bond trade. Because I can trust them. Okay. These are tough times. So, Jim Chanos announced that he's short of this thing. He's made a lot of money. Now you look at this thing, could we be making a double bottom? I wonder. This news was pretty bad today. I thought it would be enough to knock it down and give it another key lower low, but it's holding that. So on a technical basis, let's look at the weekly, although it hasn't been public that long. Let's see its weekly charts, really oversold. So, maybe we'll get a bounce. The whole thing is going to be happening is trading with Bitcoin, and Bitcoin, I don't know if people have heard, if we get that key level of 21,000, 20 to 21,000. If it breaks down to there, does it create a margin call? We'll have to see, because it's getting awfully close. But again, this is getting very, very oversold as well. And now, of course, the last time it got oversold, it bounced back for like a day and then traded sideways for a month. So that wouldn't be that great. And even this one, it's tough. We're in a tightening. This is the problem is these cryptocurrencies have been trading with liquidity. The liquidity is being drained, and that is not good. These things are going to have to come down. The key on Bitcoin is 19,000. That was a 2017 high. That old high, which was old resistance, is now key support. We break below that, which I don't think we'll do soon. But if we do at some point, then you got a whole nother retest. That's going to get scary. That we really need to hold 19,000. But Coinbase, yeah, it's just when you got like Jim Chanos has been so right on it. It hasn't been acting well. Could we get a bounce here? If you really want to, if you really got we use lottery tickets sometimes. You want to buy a lottery ticket where it's like, I'm going to put a small amount of money into an option. Let's see, how do the Coinbase options trade? I've looked at this before, but if you, let's just see here. And you want to take a little lottery ticket where it's like, it's money I don't care if I ever lose. I'm sorry, I don't care if I lose 100% of it. And it's like, you want to go out and buy the $55. Well, these things expire. I don't want to go these too close, but geez, I'm looking at the wrong side. Sorry, I'm going to look at the calls. $50. Even though those are expensive. Wow, Eesh, that's expensive. Those are pretty expensive. This time was worth the lottery ticket. Again, probably because the VIX is high, but yeah, I just don't. I'm just going to avoid it. You want to buy it now? Well, what you can do is buy it now and use like a 5%. Stop level. In other words, if it goes down 5%, just get out. But buying the options here, they don't look like they're pretty expensive. And
check out MSTR. I think that company, that dude just took out like a $2 billion loan, bought Bitcoin, and it tanked from like 29 to 21. So there could be a margin call scenario if Bitcoin goes below 21,000. I think that's their price or something.
That's the big thing people talk about. It was a $500 million loan. I don't think it was $2 billion. I think it was $500 million. But either way, it goes below. The street is saying if it goes below 21,000, and it stays there. Some people are saying 20,000, but either way, they're going to get a big margin call. And like I said, that's going to cause margin calls for other people, and they're not going to be Bitcoin is liquid, but it's more liquid than most of them, but it's still not liquid enough to handle all these things. People will have to sell stocks. This is the one thing that could cause bigger problems. This is exactly what happened in May. This is what in early May. That's when MicroStrategy got absolutely crushed. Okay, that's when we had the big margin calls in Bitcoin, and people had to go into the stock market to sell stocks. That's why they had that big sell-off, forced selling. Crash is not. I say we haven't had a crash, but one thing is for sure, and whether we have a crash or not, we're already down a lot. But crashes do not happen because of bad fundamentals. They don't happen because the economy is going into recession. They don't happen because the stock market gets really expensive. They happen for when I say one reason and one reason only. I suppose somebody flies a plane to a building. Okay, so that could cause it. But really, what causes it is forced selling. And remember, that's why crashes don't happen from tops unless there's a World War I. And they closed the stock market for a month. Okay, but the thing is, the reason for that is people don't get margin calls from the top. If you have highly leveraged positions and then something goes down 5, 6, 7, 8%, you don't get a margin call. I mean, you lose a little money, but you don't get a margin call. That's why it's when something gets down 15% or more, that's when the margin calls start coming in. That's when the crash takes place because it's indiscriminate selling. It's like, I need to raise the money to meet my margin call. It doesn't matter. I don't care if it's cheap. I don't care if it's oversold. Sell it. So that's the big fear. That's the big fear for the next couple of days. If we can avoid that and the Fed can get a little bit more aggressive, I think the market will bounce. We're getting very oversold. The sentiment's getting very bearish. Some of the key sentiment readings that I follow that aren't ones that necessarily everybody follows, but so that's what we're looking for. So anyway, but keep a very close eye on that. But anyway, I've been kind of rambling on here for 2 hours. I'm sorry to go for so long, but it's an important time in the marketplace. We're heading into the summer months. It's not going to be it's not going to be a boring summer. That's for darn sure. Could we have a couple of a boring week or two here or there? Maybe, but July is not going to be boring because we're getting into the earnings season, and August, it's just too much going on, and then of course we get into the September October timeframe, which is when we really get the big turns in the marketplace. So this can be a great time for the markets, and I just Rodrigo, maybe I think kind of wrap things up here and let you get. I hope you'll stay here and listen to Rodrigo. He'll show you the chat room and show you how it really works. But it's just a great time in the markets. We've been able to really take advantage of it this year, all year, and even before this year. This is something that. Again, you want to do more than just embrace it. The tools are there. Let's we work as really well as a team in this situation, and have made some really nice profits, and we learn a lot from each other. And people get discouraged because there's definitely some losses. Believe me, I'm not your investment advisor. Options are definitely a risky business, but what I try to do is keep it. Add some risk management ideas, and so that you can avoid the big let's say right there. To avoid the big losses on the one hand, and let the winners gain in a big way, and that's really what we're looking for everything. So that's what I really have, and thanks a lot for joining us. So those who joined today, and hope those others will consider it. It's going to be an amazing rest of the week, and I think amazing rest of the year. Good luck with everything. Thanks a lot. And Rodrigo, thank you, buddy. And we'll talk to you real soon.
Yeah, absolutely, Matt. And quick last question here from someone.
Sure.
What is so far the chat room? How is the performance of the chat room so far since we started?
Well, the stock. The stock over the trades that I've done, and we're up more than 500% in the trades that I've done.
Okay. All right, that's all right, Jerry. So there you go. That's your answer. Great stuff. So you can see. And thanks a lot, Matt. I'll see you in the chat room tomorrow. Thanks for everything here, man.
Okay. Thanks, buddy. Thank you too.
All right. Okay, folks. So Chief Market Strategist at Miller Tabak, Matt Malley, 40 years in all of Wall Street. There you go. Great session. And I'm going to show you guys the chat room, right, where you can get all the trade ideas, all the setups, entries, exits from Matt Malley. Some of you guys, I mean, you guys saw it. He's very good at what he does. He's been doing it for quite some time. Very well known and respected in the industry. So I think that you guys look, try it out. There's a 7-day money back guaranteed. Like if you enjoyed this, imagine doing this every day with him. So you get all of his trades, all of his entries, all of his exits. Keep in mind, like you turn on CNBC, all those people in the investment panel, they're down 80%. They'll tell you themselves. And in the chat room, it's like a totally different story. So if you're new to options, I think this is great for you because you literally have the entries and exits. You have the contract, like expiration date, everything, right? So there's no confusion. You're not doing anything complex like butterflies, condors, and nothing like that. It's it's the same concept as buying a stock. You buy a stock and you sell it. The same thing as a contract. You buy it, you sell it, same thing, right? You buy a call, you sell it, you buy a put, then you sell it. So it's very simple, right? And you get all the exact timestamps, right? Transparency, number one, right? There you go. Adding contract, date, strike, time. That's all you need, my friend. Okay. You don't need nothing more than that, really. That's really how the money's made. So like all the people that I talked to in the chat room, right? A huge community here of like 100 something people. They're all, I mean, I remember when I started this with Matt, we started from scratch, but now there's a great community and everybody works together. Everybody helps each other out. I think you really should give this a shot, especially with the volatility that we have in the markets. So, and for the most part, if you join this, I guarantee you that in 2-3 months max, like you're going to see the markets from a different perspective. It's just different when you do it with somebody that's, like very, very well knowledgeable in this field like Matt. So I hope you guys enjoyed this stuff. I'm going to leave the link there in the chat for you guys to check it out on the Zoom chat and on the YouTube side. Thanks a lot, guys. And this is the chat room, pretty straightforward, right? You got Matt's important chats, the inner circle chat where everybody else is. Everybody else talks there. And then you have the sessions on Tuesdays at 11:30 a.m. Eastern. Everybody that joins gets a free laptop, and that's till midnight. So, all right, folks, I'll see you guys next time. And for the rest of you guys, I'll see you guys in the chat room. Shout out James Donahue. I'll see you soon, brother. Bye.